Jupiter Wagons up 7.5% or thereabouts. JBM Auto from the Auto Pack doing quite well this morning as well, up about 5.5%. Trill, Transformers and Rectifiers is making that comeback, continuing to gain ground. Up about 4% or so or thereabouts. And IT really is the story of the morning after 6 sessions of declines, which took the index to levels last seen, if I'm not mistaken, in 2023. The index as a whole is bouncing back quite dramatically. But I'd like to go across to my colleague and the Chief of Bureau in New Delhi, Shrimi Chaudhary, because she's got the latest developments on the disinvestment process in IDBI Bank. This is exclusive information that she's picking up. In fact, she brought you exclusive details of the fact that the initial plan was shelved, and you already saw the stock reacting to that. Shrimi, what are you picking up now?
Yeah, let's say government is reassessing its next move on the bank lending disinvestment with a crucial decision.
Shrimi, I'm going to have to stop you there because the line is not very clear. We're going to try and dial you in on a better line. In the meanwhile, let me go across to Chandan Taparia just to get a sense of whether or not this up move in IT, a 2% move on the index level, is sustainable on the upside, and whether this is, on the other hand, a dead cat bounce, because the pack as a whole has been beaten down so dramatically. It is already off the high point of the day. Chandan, what's the view?
Yeah, so like if I look at the Nifty IT, we have seen a recovery of around 2% today, but before that the counter really witnessed a corrective move in last almost 6 to 7 weeks. Nifty IT was quoting at 36,000 and yesterday it made low near 28,250. So we have seen a corrective move more than 25 to 33%. So after that decline, some recovery could be seen, but we need to understand how much bounce could be there. But as of now, if I look at all the data setup, most of the counter and even index itself getting the sense of oversold territory, and usually oversold counter witnesses some recovery in the market scenario. So if I have to pick one name, it may be HCL Tech with the formation of bullish divergence. Even in the last time, April 2025, it took support near 1300 and then rallied well. This time also it took support near 1300. So 1300 plays an important role for the counter, and because of that, it can bounce towards 1400 marks. So one can look at the selective IT name for recovery or short covering move trigger from current level.
And just a very, very quick follow-up to that. We spoke about Tata Steel. It was one of your picks, but the metal index is the one index that is taken on the chin today. Chandan, you want to revise your view on Tata Steel, or are you still holding on?
So again, recommended positive view. Counter really rallied well in last 2 days. After the positive opening, the counter failed to hold its opening level. So I don't want to give more conviction here. I'll just wait and watch. I can go with other sector because I don't believe that if sector is not performing, better to go for the same. I can look at the selective financial or few IT name for reversal or counter like PCEL. So I'm just holding back myself for Tata Steel or metal counter as of now.
Okay, thanks a lot, Chandan, for joining in today and giving us your thoughts. Parag Bhai, thank you so much for, as always, for being with us and guiding us through these initial hours. Okay, an exclusive story. The fate of IDBI disinvestment process may be decided next week, as sources tell NDTV Profit that Cabinet Secretary is set to hold the meeting with DIPAM and other key ministries soon. Shrimi, who's gotten all these details, joins me right now. Shrimi, what are you picking up and what are the timelines most importantly?
Yeah, so Neeraj, government is reassessing its next move on this long-pending disinvestment with a crucial decision expected to be as early as next week, is source indicating. And at the center of the deliberation, it's a high-level meeting which is going to take place probably by Monday or Tuesday is what we are picking up. And Cabinet Secretary is going to lead this meeting with all the officials, all the key ministry, including DIPAM, who is handling the entire disinvestment process, and will take a stock of the situation and chart the way forward. So two clear options currently are on table. One, the government could choose to go back to the market and invite fresh bids, but that path isn't straightforward because it would mean that they have to restart the process from scratch, and it could potentially delaying the transaction further. The second option is to hit pause with the global markets on edge, triggered by the Iran conflict. So they may decide to wait for more stable conditions before going ahead with this. And this rethinking coming at a time when we've been reporting that financial bid is coming below the reserve price set by the government. But in the meantime, what we are also hearing that they may also review this entire reserve price mechanism as well, that whether it's after this whole episode. So we need to see that how there will be a change from the policy front on the reserve price. So as things stand, as we know, government and IDBI holds 45.48 and 49.24 each stake in IDBI Bank. But so despite the current roadblock, sources indicating that the intent remains unchanged and Centre is still committed to exiting IDBI Bank and is targeting for FY27 for disinvestment. But how that will pan out, because all eye on the next week meeting, which could determine whether the IDBI Bank stake shall get a fresh start or put on the back burner for the time being.
The market's listening to this. Shimi, thanks so much for that. About a 3% uptick on IDBI after the drubbing that it got in the preceding couple of sessions. Okay, beyond IDBI, the markets are doing not too badly as well. Aman Chauhan, fund manager at Abacus Asset Managers LLP, Johnson right now with his thoughts on the markets currently. Aman, great having you. Thanks for taking the time out. It's been a while, so good talking to you again. And you know, the context is great because you're talking to us at a time when the markets have taken a steep correction, never mind that bounce back of the last couple of days. And you guys have a product which is a small cap focused product, which will be constructed from the ground up, right? Because you just closed the NFO as well. So one, tell us, are you constructive in the markets at the current time, or would you bide your time a little bit and stagger out the purchases? Why in either of the cases?
Sure. Morning. Yeah, so we are, I can say positive in the markets, but at the same time, we are not aggressive. So we'll take our time out to get deployed, both in the new as well as in the existing funds. Whatever cash we had over the last 15-20 days, we have said out of the 10% cash, we would have deployed 2-3% in the last 15 days. So not in a hurry, but definitely deploying cash. We are not creating cash, we are not selling. Positive in the market, but not aggressive.
Okay, Aman, how do I read into this? So therefore, if you're not aggressive, but the valuations are constructive, would you believe that you're biding your time because it pays to be defensive and because there could be some accidents? Or do you believe earnings growth is at risk?
No, it's more of uncertainty in the near term that is holding on to us to be very aggressive. Imagine if you had been aggressive in the third or fourth day of the war, then you would have lost another 5-10%, right? So even now, I'm not saying we can have a 5-10% drawdown, but there's always a possibility if something goes wrong, or if the US market were to correct or something happens there, then the Indian market will all follow, right? So this global uncertainty is something that is holding us to be very aggressive. On the valuations front or on the earnings front, valuations at pockets are definitely attractive. That's the reason we had an NFO. That's the reason we are positive on the market. Having said that, earnings risk will be visible more in the first quarter. March quarter, I believe most of the companies have inventory, both raw material as well as your selling contracts. So that's not going to impact much the higher crude price. But June quarter definitely will see impact. But at the same time, if by that time, the war situation de-escalates, we have a ceasefire or whatever happens, and the crude is back to, say, 70s or 60s, then people are going to ignore the margin impact in just 1 or 2 quarters, right? So what is more important is where the crude settles in the near term and how soon we have a de-escalation in Middle East. That's something which is the main thing. Margin pressure is definitely going to be there, but then people will take it in stride. If crude stays higher for longer, then yes, then the whole narrative for FY27 earnings, 28 earnings and the impact then starts getting discussed.
Hi, morning, Alex here. So how are you going to play this at this moment in terms of strategy, right? Because, and I'm not asking whether you will hold a dramatic amount of cash. I'm just asking whether it is going to be slightly more than usual, where you will keep dry powder available, or do you anticipate that there could potentially be churn with you being a little nimble to rotate out of certain liquid names to take opportunity that comes your way, and those opportunities are certain to come in the near term?
So typically we have 4-5% cash in our portfolios.
Yeah.
Right now it will be higher, around 9-10%. Ideally, we'd like to keep it and then gradually deploy this cash for the next 1-2 months as this situation unfolds. So it's not a very high cash that we have, but yeah, it's higher than normal for us. From the portfolio stance, we are not looking at it from a liquidity perspective, what is more liquid or what is less liquid. The ideas remain the same, what we like, and at a price. If that is something which is available, we're happy to come in and buy that rather than looking as to how liquid or illiquid it is. Obviously, there is sectoral preferences in the wake of the higher crude prices. So we prefer more of pharma today. We prefer more of domestic manufacturing, cement, more of you can say financials versus say IT or chemicals in that sense, which are not something which is in our favored list right now.
Thank you so much for speaking to us this morning, Aman, and great to have you on the channel. We hope to get you back for a longer conversation on what's happening with markets as well. We're in a fine mood actually today. It's not half bad at all. And above the 23,700 mark, one consistent theme that we're hearing from companies, and look at the whole score of exchange filings which have come in, that we need to look at an alternative. Even if we see a resolution sooner than later of this entire crisis in the Middle East, the question of alternative energy forms becomes crucial right now. And to speak to us on this is Devansh Jain, Executive Director at Inox GFL Group, who's joining in. Devansh, very good morning and thank you for speaking with us. Great to have you on the show. Let's talk a bit about how renewables could get a very crucial push right now as energy security becomes front and center from an Indian perspective. Are you seeing more and more corporates coming forward to look for such solutions?
Hi, good morning, Tamanna. No, absolutely. Certainly, in today's volatile geopolitical environment, clearly renewables are no longer optional. I mean, I think they've not been optional for a while, but they're absolutely central to national energy security. And I think some of the largest corporates in India have already realized that. There's been a very large C&I basket in India. And I think increasingly, as we're seeing, more and more corporates are fine-tuning the energy transition or a power policy such that renewables is becoming more and more mainstream. And I think a huge credit goes to PM Modi for his long-term thinking and putting in place the strategy which existed, which was to get to about 500 gigawatts of renewable energy capacity. But clearly in what we're seeing with what's happening to crude, what's happening with gas, corporates who have renewables in their portfolio are far more insulated. And I think increasingly we'll see more and more corporates jumping the bandwagon.
Devansh, this is a question that we asked someone yesterday as well. Does the whole renewables movement get a push? The response was, but we've been talking about it from the last 10 years. And it really hasn't moved at the pace it should have. Once everything goes back to normal, people will start making those cost considerations. Are you worried we might lose this opportunity?
Look, I'm not sure who you spoke to, but first and foremost, as Honorable Prime Minister set a 500 gigawatt target, I say 2032, you can either have optimistic and positive people, wherein, for example, if the government achieves 450 gigawatt, we'll go out and say they've done a phenomenal job. Or you can have very pessimistic people, wherein even if we achieve 400 or 450, they'll come in and say, "Dekha, fail ho gaye, humne to kaha hi tha." I think I belong to the more optimistic.
I'll give you the context also of what that conversation was. That 10 years ago, India was importing close to 70-80% of specific needs on crude. Now it's 90%. Because yes, renewable energy has grown, but the pace of energy needs and consumption of our economy and the rate at which we're growing is outstripping it.
Look, now that's a separate topic. Fact of the matter is, if you go back to 10 years, maybe we've gone from, say, about 70, 80 gigawatts of renewables now to about 300 gigawatts plus of renewables. Imagine if we didn't have that. I remember in one of the discussions with, our Industry and Commerce Minister, Piyush Goyal, there was some talk of us saving almost $75 to $80 billion a year annually in terms of crude imports had we not had this kind of renewable energy capacity. Number one. Number two, I think India is putting up almost 40-45 gigawatts of solar a year and now about 5 to 8 gigawatts of wind a year. So, I mean, those are very large capacities. keeping China aside, it's probably the third largest annual installation of solars globally. Even in terms of wind, we're installing almost the third largest pie of renewables wind as a country globally. So, of course, we may expect Dil Mange more, but let's not also forget that over the past 10 years, population growth has been phenomenal. Of course, energy intensity has gone up. But I think if you look at a lot of the changes which are taking place over the past 2 to 3 years, a lot of energy efficiency measures, a lot of decentralized, digital-led renewable energy systems are increasingly coming to play. And I think a lot of efficiency mechanisms are going into transmission of electricity and smart metering concepts. So, I don't know about the population growth, but I would expect that in the next 3 to 5 years, you'll see this basket possibly shifting to about 70%. But I'm not an economist and I've not done all sorts of maths, but clearly India is massively contributing towards, renewables is massively contributing towards India's energy pie. And I think it'll keep contributing as we move forward.
Yeah. So certainly, Devansh, and good morning. This is Alex here. Certainly directionally positive for the domestic front. But if you look exports-wise, right, and outside India, the opportunity is there. There is uncertainty more so because of the way that political dispensations in very large jurisdictions, countries, are looking at renewable as a theme. There are statements coming about saying, I'm going to work towards having no windmills in the US. And so therefore, the question arises whether, of course, for your company and your group, inward looking is great because direction-wise, we're adding significant renewable capacity. So the opportunity exists. But that maybe is coming at a time when those opportunities overseas you're losing out. Is that the way to look at it?
Oh, let me, let's not go by one or two political statements. I was in Davos as well. Tamanna was there as well. We've heard various statements around that. But fact of the matter remains, if you look at, particularly the US, no matter what the incumbent president says over there, effectively, the highest annual installations of renewables have happened during his term. Let's not forget, there's a pipeline which comes into play, and that takes years of planning in that country. Sure, you've still got about 3.5 years to go. I don't know what's going to happen thereafter. But what's very important, and I was trying to add that to my previous point, renewables today is the cheapest source of power. So it's not as if anybody is doing a favor in terms of buying solar or wind or RTC. Solar is about 2.7, wind is about 3.3. Hybrid RTC is about 3.2 in India, globally as well, give or take 10%. But the kind of capacities you're seeing coming up globally also across nations is mind-boggling. Look at China, look at Europe, of course, a little bit of SMR nuclear as well, but even the US is setting up massive capacities. For our group, yes, Inox Wind is more a domestic play, it's completely inward looking. But if you look at Inox Solar and if you look at Inox Clean, we've gone into Africa in a big way. We're going into one of these largest developed countries in a massive way. We're investing billions over there. So clearly for our larger renewables play across the Inox GFL group, we're going to 3 different continents and we're investing billions over there.
Okay. Speaking of investing billions, Devansh, the question is a lot of players in the renewable space look at forward and backward integration. And so I'm wondering how you're planning to build that out, because generation, of course, is a huge opportunity, but the facilitation of the technology that builds that generation is also a great opportunity. So what are you doing in terms of the investments and creation of capacity there?
Look, we are one of the most integrated and deepest renewable energy platforms, not just in India, but possibly even globally. So we're in battery materials, EV materials. We make wind turbines. We make solar panels. We possibly run India's largest operations and maintenance services company. We run one of India's largest renewable EPC arms. And now we have a massive IPP front. So I don't think there's any piece of the pie which we've not put our feet into. I think this is possibly the deepest you can be in terms of an integrated approach to renewable energy.
Morning, Neeraj here. I have, one is an investor question, which I'll ask you a bit later on valuations and the dip right now. But just on the ecosystems move towards the intended target of 2030 and how it would mean what it would mean on an annual basis? Are we on track? Inox notwithstanding, are all the renewable players on track for the capacity additions that were to happen, let's say, by 2026? Or are there some disruptions because of supply chain issues and otherwise?
Look, I think, Neeraj, particularly with respect to 26, I think give or take a quarter here or there, maybe 4 to 6 months, I think we'll see all those capacities coming online. Of course, there have been certain ROW challenges on sites. There have been certain transmission infrastructure delays. I'm talking of the industry. I'm not talking specifically of Inox or Inox Windia. That's one. Having said that, I think when you look at the 2030 target, or 2032 target for that matter, as I mentioned, give or take 10 to 15% of actual commission capacity, India's bang on, we will achieve that. May give it a year or so, or 50 gigawatt here or there, we will achieve the numbers that have been set out to achieve. What is the challenge? I mean, sometimes there are land issues, sometimes there are ROW issues, and sometimes there are transmission infrastructure delays. But, that's prevalent across the world. Not going to, beat the trumpet and make a lot of noise around that. Those are normal execution challenges. So, I think it's part of the game.
Perfect. Okay. Then the question next is, Devansh, because you already have large grade institutional investors in your existing businesses. You were trying to, or maybe thinking of raising capital in the newer businesses as well. If indeed the capacity additions are on track, and therefore I would presume that cash flow prints over FY27, 28, 29, impressive as they are looking, are on track. What explains this loss of valuation momentum? Is it what's happening to Indian markets in general that FIs are withdrawing, or is there something else?
Look, I mean, Mok, you're talking specifically to our stocks.
Yeah, I mean, not just for you. The valuation multiples across the renewable energy chain have really come off, despite the fact of what you're saying, that targets are on track and therefore cash flow prints and assumptions thereof are very, very strong for FY27, 28, I presume. So what explains this? What are investors telling you?
Neeraj, let me break it into 3 baskets. One is the solar basket, one is the wind basket, and one is the IPP basket. I think what we've seen on the solar basket is you've had all sorts of players, almost 20 different companies come in and get listed, 15, 20 odd companies come in and get listed. A lot of people, 3 years prior, solar never made any money whatsoever. It was post domestic content requirements that these guys made money. And a lot, barring 2, 3 big players, I think a lot of these people have promised the moon. You now have cell going, domestic content requirement, ALCM for cell coming live this year. 2 years down the line, you have wafer and ingot, and they require large capexes. And I think by raising just 1,000 crores or making 1,000 crores, people who've never made money 3 years ago, they've gone and promised the moon. And naturally, if you have 20 other players in this sector, it's a commoditized sector. So, to my mind, and I don't mean to sound cocky, I don't think you're going to have more than 6, 7, 8 solid players in this sector. And we saw that in wind. We had 36 players. Today, we're down to 3 or 4 players who control 90% of the market. And that's the same thing which is going to happen on the solar side. On wind, I mean, primarily there are 2 large listed players. And I think it's the general capital shift which a lot of institutions made. Oh, a lot of solar companies, we see high profitability, easier to operate, execute, a lot of IPPs coming. So a lot of money shifted from possibly 2, 3, 4, 5, 6 renewable stocks now to a pool of about 25, 30. You're now going to see a lot of that money move into very strong players. We've seen that across companies in our group many times over the past 10 to 15 years. You have sporadic opportunities where stocks or PE or EV beta really comes down, and then strong players rule the roost. So I think that's something which is going to play out eventually over the next 1, 2, 3, 4 quarters as we move forward. I think on the IPP side, what has happened, again, a lot of promises. On paper, for example, people have built 2 gigawatts in about 12, 15 years. And then they say, next year, I'll double it to 4 gigawatts. So, आपने 15 साल में 2 gigawatt लगाया है, and now in 1 year, you will double it. You think I was born yesterday? And unfortunately, a lot of, when you have a lot of easy money in the market or HNIs, chalo boss, lagao, they'll double it in 1 year. Arey boss, 12 saal mein nahi kiya hai. I'm telling you, there were 3 IPOs which just happened in the past 3 or 4 months. 12 years to build what they did. and then they say in the next year we'll double it. What am I missing? What are you talking about? And they're not even integrated, by the way.
So you think
they don't execute? They have no wind turbine supplies. They have no solar supplies.
True.
They don't do O&M. So how is it going to happen?
So you think, Devansh, that the froth will settle and therefore the stronger player valuations could actually start showing it? I know you're not focused on that, but you have a good head around it, and which is why it was important to ask this to you.
Oh, absolutely. 100%. I mean, I would just say, putting aside the war scenario, which obviously where everyone becomes conservative and holds back money or holds back cash. I was hearing someone sitting on 10% cash. They used to be 2-3%, but that's just a general human phenomena, right? In times of war or uncertainty, you hold back cash. But I think 200% sure, as things stabilize, as the war recedes, as the geopolitical situation eases off, cools down, you're going to have the stronger players come in. I'll give you an example. In Inox Clean, we've built 3 gigawatt in 14 months. It's the fastest ever build out, or it's a mix of build outs and acquisitions. We've raised about 5,500 crores over the past 12 months, including last month, from amongst the largest investors globally and in India. And we're walking the talk. We've done far more than what we promised. Our pipeline ahead is short, both in terms of acquisitions and in terms of organic execution. But unfortunately, that's not happened for 75% of the industry, including one of the largest PSUs who listed their renewable energy arm. So, clearly that's led to a lot of erosion of confidence. And I think that's only going to take time to come back. And clearly the stronger players, select few stronger players, are the ones where a lot of the money will shift.
Yeah, and perhaps we're going to talk about consolidation in the space going forward as well, opportunities to acquire. I wonder though, and this is the last question that I have, which has to do with the target for 2030 again. And I'm not harping on this, I'm just asking about your opinion, because if you're talking about 500 gigawatts of non-fossil fuel sourced energy being created, we're down that path already. The question that I have is, if we move dramatically towards this whole data center setting up of infrastructure and all of that, do we have enough, or are we going to have to revise this upwards significantly, Devansh?
Look, I think given what's happening,
size of the opportunity. What is the size of the opportunity?
You're going to have a lot more people. I mean, one of our entities which we're taking over is supplying to Amazon, Sifi, some of these largest guys, and effectively when we've been talking to them, they want a lot more. And I think what's happened, unfortunately, in the Middle East, a lot of their data centers were in the Middle East, and a lot of these people are contemplating shifting, part of it to now India. And clearly, I think the requirement for the digital-led boom is going to be far more than what we've anticipated. Is going to be in multi-gigawatts. Gigawatts, hundreds of gigawatts higher than what we're setting out. But having said that, we also need to recognize, 50 gigawatts of solar is large. 10 gigawatts of wind is very large. Potentially we could move to, 60 gigawatts of solar, 10, 12 gigawatts of wind. But I think there's a limitation given, how densely populated the country is, and given ROW challenges which come up because of our, larger population. We're not sparsely populated like northern parts of China, Inner Mongolia, or some parts of America. So, give or take 20-30% higher than what we've set out. I think it's going to be a tall order to do more than that. Yes, you could have more decentralized power, not connected to the grid. Solar pumps, agri pumps, smaller, very small 5-10 kilowatt windmills, which could, be put up in rural areas to kind of feed rural feeders and agrarian communities. But other than that, I think it's hard to have more capacity. Again, I think kudos to the government. If you look at, it's a vision statement. They're amending the Atomic Energy Act. They're looking at SMR. Maybe we are 7, 8, 9 years away from that. But clearly, moving in that context, given India's increasing energy demands, obviously the lower class is moving to middle class is moving upwards. You're going to have more and more energy requirements. So I think we need we need way more power than we're even anticipating at this point.
Yeah, that's a fair point. Devansh, just want to point out, not that you look at this on an ongoing basis, we do, but your stocks are at the high point of the day. They've been moving high as you've been speaking, so the market clearly looking at this conversation very closely. Thanks so much for taking the time.
Thank you. Thank you, Tamanna. Thank you, Neeraj. Good to be with all of you and Alex.
Yeah. Likewise.
Take care. All right. Well, let's talk about the mobility space. And we were speaking about commuting stocks, right? Neeraj was pointing that out at the start today. These are stocks that are doing particularly well. But let's zero in on the automotive sector. And let's set things up for you because there's quite a few moving parts here. It's not just supply chain issues. There are price increases that are taking place. It's at the high point of the day, very close to that. Let's go across first to Puneet, and then we've got Macquarie's thesis on this as well that we're going to speak about in just a bit. But Puneet, what are the key aspects that you're focused on right now in the automotive space?
Well, thank you for that. Well, Macquarie's report lends some, at this point in time, some view in terms of the energy costs that have risen up. And there are three key points that they make in this report. The first one, they're saying that the focus will now, of course, be on earnings at this point of time where we have seen macro uncertainty, but emanating from demand and margin, that's the first key point. The second, they've highlighted that while they have been constructing based on the healthy demand at this point of time, given the growth uncertainty that they are seeing, they could see some margin risk which they expect now for the Indian auto stocks, as well as underperformance in the near term because of this energy cost risen as well. So while of course there has been a lot more focus on demand, which we've seen consistently around January and February, a little bit of context from the analyst Ashish Jain on this aspect of the reason on this particular note. They have an outperform rating on quite a few stocks: M&M, Hyundai, Maruti, Escorts, Hero, TVS and Uno Minda. But on this energy supply bit, it's a very interesting aspect to look at and get some perspective too.
Got it. All right, we got, thanks so much, Puneet, for joining us and telling us about that. But Ashish Jain, India Mobility and Materials Analyst at Macquarie Capital, joining us this morning. Ashish, thanks so much for taking the time for speaking to us on India Market Open on NDTV Profit. Let me start with asking you what level of disruption you're seeing in the financials, in the earnings trajectory of the automotive basket, given the geopolitical uncertainty we've seen throughout 2026, which is culminating in where we stand right now.
So hi, good morning, everyone, and good morning to viewers as well. So there are two aspects, to the potential disruption. If I go back to the, before the time when the conflict started, the view on the sector was quite positive, and this was on the back of very strong demand momentum that we were seeing, and we also believed that while some margin risk were coming from higher commodity prices, in a strong demand environment, the industry will be able to manage margins at a steady level. Now, since then, two things have happened. One, there are multiple cost risks which have come up, which includes sharp increase in aluminum prices with whatever we have seen in Middle East. Second is freight cost and insurance costs going up on exports, and also continued strength in the domestic steel prices. So the margin risks have intensified versus where we were in towards the end of Feb. Second is, while as of now, Vahan data shows a fairly strong demand momentum, we believe there is a risk that some slowdown happens in demand given the macro uncertainty which we are currently seeing. Now, this may not be demand lost permanently, but this could clearly be demand which is pushed out as people have more critical things to handle now and here basis. So those are the two important risks. And the third is the supply chain itself. We have heard enough about the potential production disruption due to gas supplies and all. As per our channel checks, these have not played out in actual production slowing down, but that risk clearly lingers. Companies have been able to manage all of it till now, but that's something we have to be watchful of as we go ahead.
Ashish, so with this in mind, and the fact that there is a domestic tailwind behind, never mind this conflict, but otherwise with all the cuts that have happened, income tax, GST, etc., there's a domestic tailwind behind. How would you anticipate the rest of the year to be? Could there be a demand shock in India, or is that largely restricted to some other countries and not necessarily India, and therefore will autos continue to have a good run?
No, see again, I think that will depend upon the duration and the intensity of the conflict, because India does get impacted with whatever we import, particularly energy. We cannot kind of ignore that risk. But yeah, as and when things settle, the local macros should come into play. And unless we see a massive drag on fisc because of Middle East conflict, I think life should gradually start normalizing beyond that. And hence, we are still positioned on the constructive side, with the caveat that in the near term, as more news flow comes through and based upon how the conflict pans out, it is quite possible that the sector remains laggard in the short term. See again, I'll contrast to where we were pre the conflict. This was one sector where we were seeing continuous surprises on demand, earnings upgrades, and this sector was positioned for growth, right? And from that perspective, if near term growth risks are there, we think sector could underperform. That's something we have seen in the last 2 weeks since the conflict started. Auto has underperformed the broader markets, and if this lingers, that could continue. But to answer your broader question, as things settle, I still think the sector construct remains positive. Our channel checks indicate that sentiment is positive, and growth should come back eventually.
Okay, so yeah,
Sorry,
make the point, Ashish.
No, so I was saying is, we would look at stocks which we think are resilient, once it starts, once the conflict stops, the stocks that we think, are better positioned either from product point of view or from their...
Which would those be, therefore? Ashish, that would have been my next question to you anyway, which is that would it be the commercial vehicle space? Because ultimately you were seeing those, and you pointed out pre-conflict, you were seeing those green shoots, and everyone was bullish on the commercial vehicle play. There are opportunities now more opportunities now for pure play commercial vehicle access, right? Tata Motors CV, there's Ashok Leyland, you look at Eicher as well, and there's a component to be had there. Where would you be most bullish?
Sure. So our segmental positioning was, two-wheelers followed by commercial vehicles, followed by four-wheelers. I'm not including tractor in this because, for tractor, this is a very, very high base year. So we really need to see how fiscal 27 pans out. This year tractors could be growing at 20% plus. So from a segmental point of view, like I said, we were most bullish on two-wheelers. That remains our preferred space even now. And there we like TVS the most. And I think that's a stock worth looking at in the dip. It is down 20% from the peak. Within the commercial vehicle space, currently we do not have coverage over Tata Motor commercial vehicle, so I'll limit my comment to Ashok Leyland. Again, that stock has done quite well. But if I look at valuations today, it is still at a meaningful premium to its history. So, like I said, till the time we get clarity on how fast growth can come back, we still think the stock could be a laggard. But yeah, as things settle, for sure, CV is one space which investors should be looking at.
All right. On that note, Ashish, thanks so much for taking the time this morning. Pleasure speaking with you.
Great. Thanks a lot. Thanks.
All right. Now, we are holding on to gains for the benchmark Nifty 50, 0.5% or so for that index. But really, the story of the day so far is the Nifty IT, trading very close to the high point of the day. Now, gains of close to 3% after 6 days of a decline. We have to slip into a very quick break. We'll be back on the other side with a very important conversation in today's context. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं।
बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, number one on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
First India tour.
Welcome back. You're watching India Market Open. Markets clearly lifting their mood. I mean, off the day's high, but we've touched 23,700 a number of times by now. Still about 100 points up. We need to sustain here. What we're doing for the last couple of weeks is at 10 a.m. every day, we're giving you a sense of geopolitical news, because frankly that's the biggest factor right now in markets. And we're happy to welcome back to the show James M. Dorsey of the S. Rajaratnam School of International Studies. James, great to have you back on. You know, we started this segment and the conversation earlier on in the conflict with you, and it's good to get your perspective, I would say 10 odd days into what's been happening. I want to start with the speech or the comments made by the US President last evening, our time, where he talked about how NATO allies are not coming in to help. China's not really coming to help, nor is Japan, nor is Canada. Frankly, nobody is at this point. Do you see this as initial signs of fatigue coming in on the American side? How are you looking at it?
I think that Donald Trump is in a bind. He's created a situation in which he, at this point, cannot credibly exit the war. To credibly exit the war, he essentially has to expand it, not something that he necessarily wants to do. The Iranians have gained a major stronghold by controlling access to the strategic Strait of Hormuz. For the United States to try and wrest control of the strait from Iran, it would have to do a number of things, including presumably occupying Iranian territory, for example, islands at the mouth of the Strait of Hormuz, or potentially territory on the Iranian mainland that borders on the Strait of Hormuz. To escort ships through the Gulf, he needs resources that he would have to draw away from the actual war being conducted. And that's presumably why he's been asking for help from US allies. The problem is that they were not consulted on this war. They are opposed to this war, and they see no reason to help Mr. Trump get out of his bind.
So the last time we spoke, James, you talked about how it takes three to tango in this scenario. The Israel and Iran conflict looks like it's going to continue, even if US steps back to some extent or is keen to exit the war. And in that sense, what happens to this bind on the Strait of Hormuz?
Well, the problem, of course, is that it indeed takes three to tango. Neither Israel nor Iran sees any reason at this point to end the war. And even if Trump withdrew the United States in one form or another from the conflict, Iran certainly, but also Israel could suck the United States back in very easily. So, for example, if Iran retains control of the Strait of Hormuz, it's going to be very difficult for Trump to declare a victory. If Iran continues to strike at Gulf states, even if the United States withdraws, or at Israel, Trump could be compelled to re-enter the hostilities. So at this point, the focal point of this conflict really is the Strait of Hormuz and who controls passage through it.
James, how much of a role will Lebanon play in this entire dynamic? Because from the perspective of Israel and what it wants in this scenario, some have contended that they have an objective in Lebanon as well. And so if they enter into that war front, does it complicate things further? And what, in your opinion, could the US response in that situation be?
I don't think that what happens in Lebanon is going to affect what happens in Iran, even though the two are connected. Israel has made very clear, and the United States has supported in that it wants to see Hezbollah disarmed, something that Hezbollah has refused, certainly north of the Litani River, which is about 30 kilometers from the Israeli border. More fundamentally, what we're seeing here is a change since 2023, since the Hamas attack on Gaza, in Israeli strategy. Israeli strategy is no longer simply about military superiority and deterrence. It's about emasculating militarily its foremost neighbors at the problematic neighbors at this moment, being Syria and Lebanon, and its enemies being Iran.
James, comment about the use of information warfare, because the question for everybody sitting outside of this war front and looking in, there are question marks about the leaders in Iran, whether they're alive or dead. There was a question mark about Netanyahu himself, which the administration in Israel tried to put to rest. What role will that play in swaying opinion this way or that? Some might argue that Iran has managed to do quite a bit of damage in the way that it has portrayed information globally.
First of all, I think there's no doubt that there are two wars taking place, an information war and a kinetic war on the ground. I don't know that Iran has done that much more damage to Israel, or more damage than Israel has done to itself, particularly in the way that it has conducted the Gaza war. In terms of the rumors have been basically debunked. Anybody who knows Israel knows that you cannot hide a potential death of a prime minister. And Netanyahu, by appearing publicly to declare responsibility and victory in the killing of Iranian officials, it's clear Netanyahu is alive and in charge. With regard to the killings of two senior officials in the last 24 to 48 hours in Iran, the Iranians have confirmed it. And there is a track record on these kind of killings where the Israelis, who often are the first ones to announce it because they're the ones who perpetrated it, that their announcements are accurate.
James, there was a piece written by Ray Dalio yesterday wherein he mentions that in his belief, and it may be different, but it sounded logical that for the US to emerge from this conflict as not having lost, it is important for them to not cede control eventually of the Strait of Hormuz to Iran under the current landscape. Is that as an end game possible in the near term, that the US comes off this having the control of the Strait of Hormuz, not with Iran, even if it's not with the US, but with some other third party or something like that? Is such a thing possible?
Well, I think that the writer is correct in terms of whether or not you can declare victory. depends on whether or not you control access to the Strait of Hormuz. The problem with controlling access to the Strait of Hormuz for the United States is that it will have to involve escalating military tactics. It has various options. It can take control of Kharg Island, try and increase the stranglehold on the Iranian economy, given that the vast majority of Iranian oil exports go through Kharg Island. It can occupy 3 islands at the mouth of the Strait of Hormuz, Abu Musa and the Greater and Lesser Tum. Those are islands that Iran occupied under the Shah, not under this government, in 1971, at the time that the United Arab Emirates became independent. And of course, as the Americans have suggested, they could escort tankers with U.S. naval vessels through the Strait of Hormuz. I was there when the United States did that for the first time in 1987.
Yes.
In 1987, and the first escort was the MV Bridgeton, at the time one of the world's largest oil tankers. I was 50 meters away from the Bridgeton on the USS Fox, a destroyer, when the Bridgeton hit a mine. The Bridgeton is a 413,000 deadweight vessel. The mine did some damage. The ship was able on its own steam to make it to Dubai for repairs. Had the destroyer hit that mine, you would have seen much greater damage and casualties.
Understand. So in which case you foresee such a scenario possible, that critical islands, Kharg is anyways by not necessarily the current regime sympathizers. I mean, they are the more powerful ones on the Kharg Island, I presume. So such a scenario is possible, that US may have control of strategic points, which may, if not actually, but show them as having some say over the Strait of Hormuz, and therefore come out of this conflict in their own eyes sounding as victors.
There's no way that you can end this conflict without guarantees for free passage of shipping through the Strait of Hormuz. To achieve that at this point, either the Iranians, you have to find a deal with the Iranians that meets that requirement, or you have to impose it. To impose it would involve military action with no guaranteed outcome. In many ways, you could argue that occupying the islands at the mouth of the Hormuz would be the most effective way of doing this. What Trump decides to do, we will have to see as the USS Tripoli and the Marines aboard that vessel steam towards the Gulf.
Mr. Dorsey, the US administration has been saying that they have killed very, very senior officials in the Iranian military establishment, the latest being Ali Larijani. And the claim is that the Air Force is gone, the Navy is gone, most of the missiles have gone, most of the leadership is gone. If that is indeed the case, how long can Iran keep going on in this war? Is there a scenario where one side tires out sooner than later?
Basically, this is a game about who has the longest breath, who can absorb the greatest pain. Iran has just demonstrated the degree of resilience and regime cohesion that took Trump by surprise. The death of Ali Larijani, the head of the National Security Council, is a major blow without doubt. All the more so because while being a conservative, Larijani was also a pragmatist and wanted to find some way towards de-escalation of this conflict. We will have to see who Iran appoints, or who the new supreme leader, Mojtaba Khamenei, appoints as Larijani's successor. That could very well be someone like Saeed Jalil, who is a hardliner and a former presidential candidate, but it also could be someone like Ali Bakri, who is a former senior foreign ministry official who was involved in the nuclear negotiations.
So it depends on who can hold their breath the longest. Now, on the other side, you've had Joe Kent, the head of counterintelligence in the United States, stepping down and saying that there was no credible information of an imminent threat from Iran. Politically, this is going to get tougher for the Trump administration. Is that also one factor that could play through?
I think that domestic politics in the United States are going to be very important, particularly in a midterm election year. Fact of the matter is that what Joe Kent represents is one segment of the America First or the Make America Great Again support base of Trump, which did not want to see this war, the United States engage in this war. People like Tucker Carlson, a very prominent broadcaster, Candace Owens, and others. So what this represents is basically putting on the front burner cracks within Trump's support base, and that against the background that a majority of Americans was opposed to this war from the beginning.
James, so then from that perspective, this conference that took place last evening, our time, of course, where Donald Trump is talking about having effectively won. He's talking about the possibility of the war ending soon, maybe not this week, but soon. So all of that lends itself to what you are describing right now. And so the question to you is, if the US does pull out, does this conflict continue in some form or the other? Will Israel continue to do what it's doing right now in some form or fashion? And will there be a cessation of military action by Iran? And they've had statements, James, that they've made of selectively allowing passage through the Strait of Hormuz. Does that take place?
Well, there are two separate questions.
Yes.
First of all, this has been a war that's been going on as a covert war for years. Israel's not going to end this war just because Donald Trump says so, or at least end its attacks on Iran, whether those are covert attacks or whether that is overt warfare. The United States, obviously, if it wanted to, could force Israel to end hostilities. The question is whether they have that kind of political resolve and whether Trump would do so in an election year, given the fact that much of his support base is a evangelical support base that supports Israel. So even if today the guns fall silent, this will not be the end of the war. And if Israel strikes, for example, through targeted assassinations, as it has done in the past, Iran is certain to respond. With regard to the Strait of Hormuz, from my perspective, there is no end to the war until you have agreed safe passage through the strait, whether that is agreed in negotiations with Iran or whether that is the result of military action remains to be seen.
James, as always, an absolute pleasure speaking with you, and hopefully we can speak one more time when, if the war does not necessarily end, but hopefully the kind of action that we're seeing right now at least dissipates somewhat. Thanks so much for taking the time.
It's always a pleasure to be with you.
The pleasure is entirely ours. Let's talk about IT. And in fact, this is the story of the day so far. I was talking about this before we started the conversation with James Dorsey. In fact, since that point, the index has gone up even higher, now 3.7%. Pull up the constituents of the Nifty IT and you will see quite a few frontline stocks up and about, but the mid-cap, so-called mid-cap IT companies also doing particularly well. Oracle Fin up 5%, Coforge, Persistent, Emphasis, read down the list. HCL Tech, and remember, HCL Tech, you've seen evidence consistently of promoter buying over the course of the last 1 month. you had brokerages that have also weighed in, and CLSA is one of them. They've effectively said that they found no evidence of increased deflation in renewal contracts on account of the AI model launches, and this is an important statement to make. They say that the demand commentary remains intact, particularly in the banking and financial services industry. They're talking about retail and auto as well as healthcare that remain soft. They're also saying that a few companies have flagged off slight delays in decision making by clients, but remember that this is not necessarily a sign of artificial intelligence disruption. It is also a sign of the times. But they're also saying that direct company revenues from the Middle East is in low single digit for TCS, HCL Tech as well as Infi and Wipro. They're saying that the deal pipeline remains strong and valuations for Indian IT peers are at that 10-year average right now look attractive. This is something that more people are saying. They maintain a high conviction outperform on a few of those stocks that are doing particularly well in trade right now. Persistent and Coforge outperform on Infi, Tech Mahindra, TCS, LTI Mindtree, and a hold on Wipro as well as HCL Tech. So that entire basket looks particularly good right now, Tamanna. I wonder if it sustains, because this is, remember, after 6 days of getting battered.
But there are a couple of brokerages now that are looking positively at the Indian IT pack, especially ahead of their quarterly numbers. And the rupee depreciation, or weakening rupee, is actually going to add on to them. In fact, we should pull up the rupee. It's been hitting new lows. And remember, crude has not really come off. So both of them impacting IT, in fact, positively. You're still at 92.43 on the rupee. Meanwhile, another sector that is impacted by high crude prices, but this time because of policy moves, is aviation. It's a great relief for air travelers, as the Aviation Ministry has issued fresh guidelines mandating that at least 60% of seats on every flight be allocated free. You saw a bit of a hit on both SpiceJet and Interglobe after the news came in, though Interglobe has seen a bit of a recovery. Danish Anand joining in with more details. Danish, 60% seats have to be free. In fact, the aviation minister announced it. Up till now, what was the percentage of seats that were being charged and how many were free?
Well, that's correct. The government has recently issued new guidelines, and the airlines have to ensure that 60% of the seats in any flight must be free for sure. And if we talk about the existing norms, till now, there was no particular norm in which the airlines are mandated to allocate free particular seats. But now a fresh mandate has been passed. Earlier, DGC and the ministers used to clearly say that you have to make flying more affordable and the airlines must do something on it, and the airlines were given enough time to somehow modify their business. But now we are seeing that with this fresh mandate coming in, it is mandatorily has to be followed by all the airlines. They have to ensure that 60% of the seats have to be there free of charge, because we see that whenever we try to do a check-in online, at that time, whenever you want to, sit on your particular preferred seat, but that is for that is a paid seat. But in order to, promote flying and in order to ensure that the rights of the passengers are well brought in and everyone is aware about it, so that is why this mandate has come. And over the past few weeks, we saw that almost every airline came out with some or the other norm in which they were giving certain kind of special seats, and which were either either they were window seats or they were aisle seats. But now the airlines will have really less opportunity to charge extra for preferred seats. But besides that, the government has also told the airlines yet again that they have to ensure that there is proper transparency when it comes to passenger rights. And especially the airlines have to now inform passengers in case of denied boarding or flight cancellation that what is the particular passenger right. And similarly, the guidelines have also been issued by the government today on the safe carriage of musical instruments, also on pets. So all in all, if we see, the government is doing efforts to ensure that flying for passengers is made much more easier.
Sure. All right. Thanks so much for getting us those details. Keep an eye on the aviation stocks as well. Interglobe Aviation was trading positive. Let's take a look at where it is right now. It's given up a little bit of gains, but still trading with gains of about 1.3%. Now, it's been a few sessions of green. In fact, this is the third session in a row that perhaps if we end positive, we will be gaining for 3 sessions in a row. But There are several stocks that have taken quite a bit of a beating. Only 58 out of 492 stocks have delivered positive returns since the war began, highlighting selective opportunities rather than a broad-based recovery. But amid this, there are a few stocks which reflect solid return potential. These are perhaps stocks that have been beaten down the most. Sharad is joining in to tell you about that list and to tell you what you need to bear in mind. Sharad?
Well, yes, Alex, we have taken a filter of stocks having a 5,000 crore market cap and at least tracked by 5 analysts. And as you mentioned, the stocks which have fallen the most in this war period, but the analysts are very bullish on. This, of course, includes Birla Corp. Here, the upside is especially there on the premium cement profitability. That's where we are seeing a good amount of revenue potential in the coming time. Sapphire Foods, this is the second stock which should be in your focus. The upside is the SSG growth. That is where the bullishness is coming in. And if you look at Signature Global and Pine Labs, there are important news flows coming in where there is a good upside potential as well. JK Lakshmi Cement price hikes should aid the realization recovery, while 5-star business, there is a certain improvement coming in slippages, and stocks such as EPL, KPIT Tech and even Mrs. Bector's Food make it to the list where the return potential is more than 50%. And lastly, I'd like to add New Jet Software as well, where the analysts are very strongly bullish on.
Okay, thank you for that, Sharad. Now, everything that goes down need not necessarily come up. That's maybe only for dead cats. But so, having said that, this report is just highlighting for you what stocks have dipped the most, and then you have to assess if any of them look attractive or interesting to you. Having said that, markets off its highs, actually back up again, 154 points up now above 23,700. It's looking like a strong morning. I want to just pull up the advanced decline ratio because you're seeing this kind of a ratio after a while where you have enough green on the screen. Look at that. That's fantastic. Almost 1:10 on the advanced to decline. But that's all the time we have.
Yeah, the broader markets is the story today, apart from IT. More than 1% gains for both of those gauges, and I hope that continues through the day. I'm going to steal the close today. That brings us to the end of this edition of India Market Open. Stay tuned. Up next is Ask Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं. ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं. ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं. कैप्री लोन्स फर्ज निभाते हैं.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
Affect the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me today is Soumit Sarkar, and over the next hour or so, we'll try and solve all your stock-related queries. So if you haven't already, do start sending them on the number that's flashing on the top of your screen. You can also call us. The landline number is also flashing up there. Before we do all of that and a lot more, quickly a very quick check of how the markets are doing, because the Nifty 50 today shows you, yet again today that while the implied open did indicate a start in the green of almost 38 to 50 points, and there you saw that variance across time zones, but largely a good day for the markets. Yet again above the 23,700 levels. The heat map also shows you that perspective of key stocks like Aviation Motors, which are up in trade today. At the start of the trading session itself, the stock was the top gainer for the Nifty 50 after the correction from almost 8,000 rupees to 7,000 now. But apart from that as well, tech and IT has been a key outperformer in that sense today. Yesterday was a down and out day for the sector, but Tech Mahindra, HCL Tech, Infosys and TCS, Wipro also focuses. So 5 out of the top 6 gainers is from the IT pack, and M&M is also there up there as well. So continuing to see all those positive moves. Apart from that, the auto pack is also doing well. So you have Tata Motors, PV, Mahindra I spoke about at this point of time, and iShares, which are also doing well at the start of the trading session. But Coal India, as well as a couple of banking names, NBFC names like Bajaj Finance, are under pressure today. When you look at the sectoral heat map also very quickly, you will see, given what we've seen in the 50 stocks, that resemble in the heat map as well. So the IT pack, media, Nifty Auto, all of them are doing well at this point of time. The metal, the only one, but it's the space that's done well. So we give it some leverage at this point of time. The advance decline ratio also has been very, very strong today. Yesterday we saw the convergence from almost 2:1 to 1:1 and there the volatility. But today, steady state, almost 7:1 in terms of the favor of the advances, and the mid cap and the small cap. Before I introduce our guest for today as well, has been the other key factor, mirroring what we are seeing on the benchmarks today in terms of gains. So almost both of these index up between 1.2 to 1.5%, and in individual mover stocks that are buzzing on the back of a BSE 500 as well. You are seeing MMTC, JBM Auto, Root Mobile, Asahi India. So you're seeing large gains of over 8 to 13% in terms of individual movers. Metro brands also doing well, while the gainers are restricted to 1 to 3%. So it's a good screen today. Let's also pull up Ather Energy as a key stock, buzzing in trade today over the last half an hour or so. Started off decently, and then since then stock has been climbing up to 765 odd levels on this stock as well. Apart from that, also you're seeing a lot of individual movers. We showed you that on the BSE 500, but continue to monitor all of those key aspects. But at this point of the show, let me welcome in Vaishali Parekh, Vice President Technical Research at PL Capital. Vaishali, very good morning. Thanks so much for joining in. Before we take the stock-related queries, a very quick check on the index. Do you think that these levels of 23,600, 23,700 have some, some support at this point of time, or is it very varied between the 23,500 levels, 23,400 levels at this point of time.
For having me on the show. So I would say we had seen a decent corrective move coming in, and 22,800 was actually our support levels, and whereby we saw Nifty doing 22,950. So from there on, we are seeing a bounce. I would still consider this as a bounce back. This upward move can go towards our near-term target resistance was 23,700, and today we are comfortable about that. So I think in all likelihood this can go towards 23,900 to 2400. So we would take a step-by-step view. I won't be very confident, but yes, 24,000 would be the next target that I would look at.
Start with the query. The first one coming in from Mohit from Ludhiana. He's holding 200 shares of Container Corp, bought at a price of 512. What would be your view on this, Vaishali? Container Corp?
So yes, Container Corp, we have seen very good corrective move coming in, but 430, 440 should be the bottoming out levels. And I think he can probably average out the stock at these levels, keeping in mind 430, 440. So any day, better to average it out because since he's bought it at higher levels.
Got the view, Vaishali, but the other counter that we're focusing on is also Finolex Cable. Let's look at today's chart. Let's also pull up the year-to-date performance of this counter. It's one of the cheapest counters in that sense, of course, and we'll get to the query in just a bit. Let's look at the chart first. Because it's been as I was mentioning, a very the cheapest counter in the cables and wire space. So this year has seen an up move of almost 15%, but valuation is very, very lucrative at this point of time. At a time where we are seeing volatility in the cables and wire space, we've been putting out, had the management of KEI Industries just a few days ago as well in terms of the story we put out. Then in terms of February, there has been some destocking or limited stocking up compared to the month of January, which was very strong. So you are seeing all of those counters in focus as well. And our viewer Keshav from Chennai actually has a query now. He's holding 25 shares of the counter at almost 850 rupees. So very close to the current market levels. His question, Vaishali, largely that if he should continue to hold on for these and a level that you could recommend in terms of a stop loss and a target that you could watch out for in the next few months. So slightly more longer term query.
So I would say the stock has come out of its consolidation range. In fact, this was also our recommendation at lower levels. So I would say this is a regular retracement, what we have seen after doing a high of 960, 970 levels. But having said that, if you want to look at it minutely, then I think 800 should act as a very good support. And I think that would give a new round of momentum. Once we see the stock moving above 1,000 levels, this can perhaps go to even 1,100 to 1,200. So for now, it's a positive view. View gets negated if we see a close below 780.
Well, our first caller query coming in from Vinod from Mumbai. Vinod, you can go ahead and ask your query.
Yeah, in fact, I'm a long-term investor for 5 to 7 years. I just wanted advice on Mahindra and TVS Motor. Should I invest in 2-3 tranches over next week or so for long term?
Okay.
And if you allow me one more question, similar this thing for 3 hotels, Indian Hotel, ITC Hotel, and Lemon Tree.
Okay. Vaishali, any view on M&M or TVS Motor?
So, well, I would say we have seen very good corrective move. But having said that, I don't say that there could not be a possibility of a further downslide coming in. So I would say the levels are definitely attractive. But from here on, every dip, one should buy it in tranches.
When it comes to the hotel sector, Indian Hotel, ITC, Lemon Tree, what would be your top pick here?
Well, I would definitely go for Indian Hotels to start with, and then also Lemon Tree.
Got the view, Vaishali, and thank you so much for that. But the next question that's coming in is coming from Mr. Chandru. Now he's bought into Inox Wind at almost 89 rupees per share. So let's pull up the chart. And he's holding 500 shares of this counter. Now we had the management today. Very, very optimistic to say the least. And I urge you viewers, if you missed that chart in India Market Open, do try to catch it because there is a lot more drama also in that sense of what Devan Jain of Inox Wind had to address in terms of what's happening with the industry as a whole. But Vaishali, in terms of this particular counter, Ramalingam from Chennai, as I mentioned, is holding shares at 89. Stocks trading at 79 now. Would you recommend averaging down at this point of time? Any view on the stock?
For me, purely on technical parameters, even if I'm looking at the longer term time frame charts, the trend is definitely down. But I would say that if he's really interested, it's in deep oversold. So I would say that, and also there is exhaustion in indicators. So keep a stop loss of 75. And first, we start with an expectation of a bounce back. Unless and until the stock moves above 100, it's very hard to say whether it's even going for a reversal. So for now, purely from technical perspective and a bounce back, I would say buy with a stop loss of 75.
Okay. Sunil from Pune is holding 100 shares of Hindustan Copper bought at a price of 490. He wants to know the short-term target on this counter and any stop loss if there. Vaishali, any target and stop loss for Hindustan Copper?
If we are looking at overall full metal index, it has still sustained and it has held on in spite of all the market volatility that one is witnessing. So that signifies the strength of the sector. Talking about Hindustan Copper, after making a high of nearly 750 levels, we've seen a good corrective move. I think 460, 470 is a good support band. One should start accumulating again at these levels to get into a new round of momentum.
Got that view, Vaishali, and thanks so much for that. But the other counter that we're focusing on today is on Hindustan Zinc. Now, let's pull up the year-to-date chart as well as the one-year chart as well. You'll, of course, see a very big outperformance in the last 1 year. But the year-to-date one is also very interesting because from the highs, we have seen correction on this stock. So it's down 12%, but you can see that from the midpoint, it's given up a lot of those gains over the last few weeks. Now, Siva from Amravati has been holding this counter almost 5,000 shares bought at 535. Now his question is that what he should do for the next 6 months on Hindustan Zinc. Vaishali, what would be your recommendation?
The stock has corrected significantly, but it does not damage the trend. So I would say 510, 500 is a good support level. So 6 months at the horizon, one can perhaps add more to see further on strength. But if we see the stock falling below 480, then the strength is lost. So I would say for now, it's definitely a hold. Add on decline at 510 levels if possible, and keep a stop loss of 480.
Next query is from Priti Shah. She is holding 3,500 shares of REC for the last 16 months and she has bought this at a price of 540. Currently sitting on a huge loss. She wants to know the target for the next 6 months and any stop loss that she should maintain on this, especially REC.
Stop loss, yes. So currently it's at really a make or break level. Even when I'm looking at the weekly chart, it's at a 200 period level. So keep a stop loss of 320 and hold because I think this stock can give a bounce and go towards 380 levels. So 320 would be the stop loss to continue holding.
Got that view, Vaishali. The next question that's coming in is from Murthy from Vizag. He's holding shares of HPL Electric and he's bought 100 shares of this particular counter at 425. So since then, has seen a meaningful correction from his buying price. Vaishali, his question largely being if you should continue to hold on to this counter or average down at 290, which is the current market price. What would be your recommendation?
Say to average out, but it's better to wait for a confirmation for a reversal because once you see the support levels being broken, I see why not it would go further lower. So for now, there is a negative bias. Keep a stop loss of 250 to continue holding. And unless and until I would say add more at 320. So that is will be the level where we see that yes, the stock is showing signs of bounce back.
Got that view, Vaishali, but time now to deep dive into the BSE F&O market setup as well. And as always, Sharad is joining us to give us some of those cues. Sharad, give us some perspective because the second, third consecutive day of uptrend, what are you picking up?
Well, thanks a lot for that. And now, importantly, the trend is coming that the bullish sentiment is coming in. And of course, the IT pack is leading here. And Somit largely pointed out yesterday also that there might be a rally up till the numbers coming out. HCL Tech, Tech Mahindra, Infosys, TCS, all of them in the top gainers and all of them more than 3% up. BL, L&T, RIL also holding up in the green. But what's not working is definitely ICICI Bank and even HDFC Bank. That's a little bit of a drag coming in when it comes to the BankX. But the technical setup of Sensex is really strong right now. With the last 3 trading session, we saw a little bit of gyrations, but now we are seeing it's a convincing trade, and maybe a short-term level bottoming out has been there in the markets. But yes, the support is not coming in from the private banks, and that might be a concern. Let's look at the stocks. Long build-up, it's definitely going to be, Oracle Financial Services comes into the picture. Angel one after what we saw in BSE and MCX over the last 2 days. Now this is also picking up. Let's look at the short covering. This of course includes the IT names. Tata Tech, KPIT Tech, these were really beaten down over the last 2 to 3 odd weeks. So we are seeing a good amount of short covering, and largely all the IT and product companies are there. Long unwinding in JSPL and JSW Steel, and the metals space we are seeing that's the only drag in the markets, and we can see that drag happening in the short build-up for both Hindustan Zinc and Vedanta as well. So yes, IT and metals, that's where the polarization is happening. But the good news is that there's a good value buying happening in the small and mid-cap space.
Thanks so much for that, Sharad. But taking up the next question now, and it's coming from the chemical space on Rosari Biotech. Now, Vijay Kirti from Chennai is actually holding shares at 775. Let's pull up that counter. And he probably bought it at the highs of June and July of 2025 last year, where it was at those levels above 700. And he's holding 50 shares of this counter, Vaishali. And question largely being if you should book out his losses right now, or he can average. He's sitting on a loss of almost 17,000 rupees. What would be your view?
Well, it's continuing to make new lows every day. I mean, again, on technical parameters, it's deeply corrected and deeply oversold. So my view would be to exit on a bounce, maybe around up to 460, 480 levels. So keep a stop loss of 415 and continue holding, because as I said, it's a very deeply oversold stock. One can expect a bounce. That would be the level to watch and have a relook.
Arvind from Pune is holding 200 shares of IDBI Bank at a price of 89. He wants to know whether should he add more or should he continue to hold the shares he has already. Vaishali, any view on IDBI Bank?
Well, everyone is trapped in this stock. I think with a gap down opening, and I think the support comes at 70 levels. That would be the level to average out.
Got the view, Vaishali. But next question coming in, it's on a stock that's doing well today, the Urban Company. Pull up the counter, and Kishore from Hyderabad, who's holding almost 100 shares, bought at 104, must be a happy man today. Stock's up 13% as we speak, and he's asking if he should buy more at this point of time. So he's seen the gains today, asking if he should buy more at this price, and what would be a key level. Now, Vaishali, I know it's a very recent listing in that sense, so very limited historical data, but anything that you can suggest on Urban Company at this point of time?
Definitely. So actually, today is the first such candle with good volume. In fact, we are seeing good volume since 2 days. We have seen a very bullish candle formation. So I think now the stock is coming with an elevation of its support levels at 110. So by keeping 110 as your support levels, and I think the strength will be seen furthermore once we see the stock moving above 130 levels. So in my view, the way today we have seen a formation, it's a positive view, and 110 should be the near-term support to start buying this stock.
Okay. Sunita from Hyderabad is holding Anup Engineering. Currently, she's sitting on a big loss. She had purchased at a price of 2,522. Any stop loss that you would recommend? Should she continue to even hold this counter, Vaishali?
I think the stock is also showing signs of revival. So keep a stop loss of 1,400. And I think gradually the stock can go towards 2,300 levels also. So hold on, but follow the levels.
Got the view, Vaishali. But the other question that's coming is from Pramod from Bangalore, and this one's on Power Grid. Now, he is actually wanting to enter this counter, Vaishali, at the current market price. Would you suggest if it's a good time to enter the stock now?
Yes, I mean, it looks quite positive, but on broad base, I would say 290 is the support level, and the stock has held on with its upward trend in spite of all the choppiness that market has witnessed in these last few days. So 290 would act as a support. The near-term target would be around 315, 318, and above that, once it sustains, it would be ready for a takeoff for higher targets.
Right. Sunny wants to know, Vaishali, what would be the best price to buy Ethos and Samman Capital?
So Ethos is currently 2095. That's the one we are looking at, right? So just a minute. Yeah, so Ethos has done pretty much its corrective move. I think 1800 acts as a very good support. So we are pretty much close to the support level, so it can be bought at these levels. And the first target that one can look at is 2200. For after that 24. The main hurdle lies at 2700.
Got that view, Vaishali. But the next question that's coming in, it's on a metal pack, Vaishali, now. And our viewer actually wants to know a fresh entry point. So we've discussed Hindustan Zinc today, but apart from that also Vedanta, Hindustan Copper, anything that's on your radar which investors can look at now from a fresh point of view, and any timeline that you could give, how long can they hold these counters as well?
I would not say so, because as I said, that market is an absolute downward trend. Nifty Metal Index also, if I were to say, it is showing some bit of exhaustion for now. So I would say it's always better. The long-term trend is intact. So I would say continue holding or accumulate these stocks, because of course the long-term picture still looks very promising. But I cannot vouch for the support levels, because if we see one round of selling pressure coming in, so then 11,200 levels can break, and this can go towards 10,500, talking about the metal index. So wisdom would be to accumulate. As I said, Hindustan Copper, we are pretty much close to the support levels. Hindustan Zinc, you can see a dip of another 4 to 5%. That would be a level to start buying.
Got that view, Vaishali. But the next question, that's coming in, it's on GMR Airports. Now, pull up the stock, pull up the long-term one-year chart as well. Has been a very interesting one in terms of at least the fundamental side of things, because you've seen debt as a key concern coming down a bit. The airports both have seen a decent occupancy. Stocks up 21%. But Suresh Nair from Hyderabad actually wants to know about his 400 shares that he's holding at 97, Vaishali. Should he continue to hold this counter? Any momentum on the charts?
So I would say keep a stop loss of 90. Long-term chart also is very much intact with 90 as support levels. If 90 level breaks, then you could see a further selling pressure coming in. Till then, there is nothing wrong with the stock. Continue holding and observe the stock on the levels.
Next query is from Sunil Kumar from Bangalore. He's holding Shriram Finance around 9,468 shares, bought at a price of 679. Should he add more at the current levels? Any target, if you could suggest, Vaishali?
I'll just have a look. So Shriram Finance, currently you said the price is 1013, and I would say, the trend is very good, and there is nothing to worry for now. And 980 acts as a good support. So yes, you may add more if you want to. And I think if this is held on and the momentum continues, in all likelihood, this can go towards the previous high of 1100 levels too.
Time now for a very quick break. Vaishali, stay with us. A lot more stock-related queries on the site. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of people, language, and politics. Vanakkam Tamil Nadu. Here we come.
First India tour in your city. Ragon with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence.
Mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
Welcome back. You're watching Ask Profit right here on NDTV Profit. And viewers, you can also call us for your stock-related queries. The landline number for that is flashing on the top of your screen right now. But, let me also welcome, and at this point of time, Gaurang Shah, Senior Vice President at Geopolitical Investments on the fundamental side. And we have Vaishali Parekh, of course, who has been solving all your stock-related queries over the last half an hour. But Gaurang, good morning. Welcome to the show. Let me pose the next question to you from our viewer, Piyusha Kanodia on KFinTech. Now, she's holding shares at 1,067 and almost 115 shares. What would you recommend Piyusha to do? Is it a good time to continue to hold this counter average down?
Well, thank you, Puneet, for having me on the show. Good morning to all your viewers, to you and to Vaishali. A small disclosure that all recommendations that I'll be sharing with you this morning on your show are a part of our fundamental research team recommendations from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of investments in the recommendations given by, no financial interest, no conflict of interest, but we share recommendations with our clients on similar lines. They might have their investment interest. So, KFinTech, look, we are positive on the sector, Puneet. Unfortunately, we don't have a specific coverage on KFinTech, so I would rather avoid giving any specific recommendations, buy, sell or hold. But let me say this, that the government policies and the incentives that have been lined up for this particular sector looks very encouraging and promising. And the outlook for earnings improvement is absolutely very, very clear. It is a sector which is also impacted by global news flows. But if you have an elevated risk appetite, then I can surely say that this is one of the companies on the fundamental side, on the balance sheet side, it is quite strong. I won't give any specifics because we don't have a coverage.
Next query is from S. Khan and it's on Coforge. He's holding 25 shares, bought at a price of 1,696 rupees. Vaishali, should he continue to hold or exit this counter?
I would say as the IT index is giving a bounce, I think continue holding. You may see this bounce going towards 1200 levels to start with.
Got that view, Vaishali. But the next question that's coming in, it's on CDSL. Now, our viewers holding shares at 1,937 rupees per share. Let's pull up that counter now. And, stocks trading close to 1,200 now. Asif M from Pune is actually asking if he should continue to hold this counter or sell out. Gaurang, any coverage on this stock? What would you recommend?
Puneet, extremely positive on the entire capital market related theme. Again, positive on the sector, Puneet. Very recently, some time back, and let me say this, that, look, there are different kind of companies which cater to the Indian capital market, right? So you have BSE, which is a platform provider. You have services-oriented company like CDSL, NSDL. One company on which we have a coverage is Computer Age Management Services, CAMS. Then you have intermediaries. And along with that, you have a tailwind positive about possibility, Puneet, of NSE coming out with an IPO in the second part of this calendar year, which will augur well. And our view on the Indian capital market is that after this, geopolitical situation and all that cools off, we could possibly see a decent rate of return on the CAGR as far as the indices is concerned. Sector specific, you'll get better return. What I'm trying to say is that if you have invested in a strong fundamental company which is associated with the stock market, you will get the benefit of all that. And this company happens to be a depository service provider. And of course, we know the footfalls that have been increasing every month, every quarter, every year in terms of retail participation. Strong company, strong balance sheet, and potential of performance over a longer period of time. Won't give specifics.
The next query is coming in from Mahindra and it's on DCX system. He's holding 500 shares. Average price is 265. Should he hold, average, exit? Any view on this, Vaishali?
Well, DCX system, we are seeing a good consolidation. There is no clear trend as such. So it's just moving in a range of 160 to around 230. That would be the resistance level. So only unless and until we see a decisive break above or below, could we decide the next trend. So for now, continue holding. Let's have a relook at 230 levels once it goes towards that.
Got that view, Vaishali. But another caller now from Pune, and Vishal has a stock query for us. Vishal, good morning. Welcome to the show. What's your query?
Good morning, sir. I have Piramal Pharma on the rate of 205.
Okay.
So I just want to know what to do. It's in red now.
And did you buy this, Vishal, from a long-term perspective?
No, not actually.
Okay, all right. Vaishali, Piramal Pharma is holding 600 shares at 205. What would you recommend to him at 143? What should he do?
So unfortunately, this stock has really underperformed in the pharma pack. But technical parameters, I would say continue holding because it's a very, very deep oversold stock. I think it's time for a bounce in this. So one can average out at these levels. But I think Gaurang would be a better person to give a fundamental view on this.
Okay. Okay. The next query is coming in from Navneet from Patiala and it's on Lupin. He's holding 13 shares at an average buying price of 2,272. He wants to know whether should he add more of Lupin. Gaurang, any view on this?
Well, sure. So this happens to be one of the better performing stocks in the recent times. On the fundamental side, we have a positive coverage. And if you are invested in Lupin from a long-term point of view, my advice is to continue hold on from our research department, research team. A good part, Somit, about Lupin is that the negativity in terms of export market and the overshadow of US market news flows, which used to be a concern in terms of underperformance for Lupin, is now in the rear view mirror. And the company has done well in terms of exports. So we have a positive coverage on Lupin.
Gaurang, but Bharti Airtel is also another counter that we are putting our focus on. Sayan from Kolkata holds shares at 1881, which is very close to the current market price, and he's holding 25 shares, Gaurang. asking if we should add more from the long-term perspective. And Gaurang, would you recommend that? Stocks down almost 15% from the highs that we saw at the start of the year. And of course, led by the correction that we see in the broader markets as well. But if it's a good time to add this counter now?
Puneet, according to me, this is the time that you need to bring out your shopping list. Markets have corrected, correct me if I'm wrong, Puneet, from the highest level that we saw of 26,380 or something like that to 23,000 or sub below that yesterday. Now we have recovered. This is the time wherein you need to be a little bit more investment kind of an approach for the market. Bharti Airtel corrected primarily because of the non-core business investment that they were planning to do, or they have given out the news in some NBFC from 2000 levels to close to about 1800 and now a recovery. As a disclosure on Monday itself, day before yesterday, we have given Bharti Airtel as a long-term investment idea on our YouTube channel, Geopolitical Spotlight. We are positive, second largest service provider, cellular service provider. And Puneet, one more positive thing about a cellular service provider company is that it has no close relation with rising crude oil prices. So it seems to be a good level. In case if you want to average, you can do that. If somebody wants to make a fresh investment, I would have definitely advise that. We have a positive coverage on Bharti Airtel from our fundamental research team.
Okay. The next query is coming in from Suman from Kolkata. He wants to know whether is it a right time to buy Vari Energies from long-term view. Gaurang, Vari Energies, is it a good time to enter?
Well, a lot of ups and downs post the international news flows and then a little bit of stability. Positive, we have a positive coverage on Vari Energies. And more importantly, Sumit, the entire new power generation capacity that is going to come up and the focus by the government on clean energy. My sense is that companies like Vari Energy, who are into renewable energy, will tend to benefit from a longer period of time. So for long term, hold on and continue to stay invested.
Stay invested in Vari is what Gaurang is recommending at this point of time. But another caller now from Hyderabad. Rao has a stock query for us. Rao, welcome to the show. What's your query?
Yeah, actually I purchased my IDBI bank at 76 in the morning.
This morning you purchased it?
Yeah.
Okay.
Right now it's a downgrade, right?
Right.
Should I hold it until end of the market or should I stop loss? I want to do a little bit higher.
Got it. So you ventured in for the short term. Got it. Vaishali, definitely a risky bet. And on IDBI Bank, I know you gave up earlier on, but should Rao hold his 900 shares at 76? What would be your view?
So, well, depending on the time horizon that he's ready to hold, I just mentioned 70x as a very crucial support. So, hold if you can hold for that long, or else keep today's low. I mean, exit at 674 if 74 levels break.
Got that view, Vaishali. But viewers, time now for the first round of the rapid fire. A little bit delayed today on Ask Profit, but Gaurang as well as Vaishali, keep your answers on buy, sell and hold so that we can take as many in the next 3 minutes. First question coming in on Tenneco India. Gaurang, a view on the stock and if not on Auto Ang space?
Well, Auto Ang looks quite attractive. And one thing is there that if Auto does well, these will do well. Positive on sector, like I mentioned, Uno Minda, CIE Automotive and Motherson Sumi are the preferred investment.
Right. Got it.
The next query is on Gale. He hasn't mentioned his name. So he wants to know whether is it the right time to enter Gale for the next 1 year, Gaurang?
Exploration companies are benefiting Sumit because of the higher crude oil prices, given the inventory benefit, etc.
Right.
We are positive on Gale from a long-term point of view.
Yes Bank bought at 15.36 Vaishali by a viewer Lalita. She's holding 2,300 shares. What would you recommend?
Hold.
Chaitanya wants to know whether should he buy TCS, Gaurang?
1.5, 2 year plus, definitely yes. I think all the negativity of Anthropic AI is in the past. Right. Buy for long term.
Okay.
Wheels India bought at 722 by Neha. Vaishali, I know we don't discuss this stock too much, but a 2 to 3 month view, what should she do?
You said Wheels?
Wheels India, yes.
Well, I don't track this.
Okay.
Okay, the next query is on Britannia and Hero Moto. The viewer wants to know whether is it a good time to buy for the next 5 years. Gaurang?
Do an SIP. I would advise that because it's a 5-year view. Why deprive yourself of adding it to it? So yes, both we have positive coverage, and make a lump sum investment right now and do a SIP if preferable.
Is it a good time to add Bata is what Rajesh is asking. Would you recommend that, Gaurang?
So this is a bit of a tricky kind of sector, footwear, because of the dumping, etc. that was happening.
Right.
But again, from a long-term point of view, we do have positive coverage on Bata.
Sunil Kumar from Bangalore wants to know whether should he continue holding BEL. He's already holding 32,618 shares bought at a price of 262. Vaishali, any view here?
Definitely hold with a long-term perspective.
REC bought at 380, Vaishali, and Richa wants to know a short-term view on the stock.
Short-term quite corrected, so 330 is the support level. Continue to hold.
Okay, the next query is from Gauri Gupta. She wants to know whether should she buy Vishal Mega Mart for the next 12 months, Gaurang?
So while the IPO was there, we had a coverage. Currently, we don't have coverage, but we are positive on the sector. That is, retail footfall is increasing. Don't give specifics since we don't have coverage.
Loris Labs or Sai Life Sciences, anything that's on your radar, Gaurang, from the long term?
No, none of them are under our coverage, sorry.
Got it. Well, that's the end of the first round of the rapid fire in this edition of Fast Profit. But viewers, a very short break. Gaurang as well as Vishali stay on. A lot more stock related queries on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं. ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं. ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं. कैप्री लोन्स फर्ज निभाते हैं.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Ragon with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Welcome back. You're watching Ask Profit right here on NDTV Profit. If you haven't already, do send in your queries on the WhatsApp number on the top of your screen. You can also call us, speak to us on your stock-related queries as well. The landline number is up there as well. The next question coming in is from Mohit. He is looking to enter GAIL from a long-term perspective. Gaurang, largely a little bit better insulated coming because of almost just 16% of his volumes from a Strait of Hormuz. But is it a good time to venture into GAIL at this point of time?
Put it honestly, if you're going to still time the market and wait for the right price and the right time, I think you're going to lose out on the opportunity. I think this correction, what we've seen, gives you tremendous amount of opportunity to accumulate quality stocks. On GAIL, we have a positive coverage. Go ahead and buy it. Don't put all your money at one time. Staggered investment is always a better disciplined manner of investing into stock market.
Right. The next query is from Giridhar. He's bought IX at a price of 260. Currently it's trading at 122. Obviously, this is because of the negative news that has come in on a market coupling. But Gaurang, what would be your view here? Should he continue to hold this counter or exit completely?
Sumit, first of all, I think I'll advise all your investors and viewers that try to limit your losses, because if you let your capital erode 30, 40, 50, 60% or more, then the big question comes into effect whether you will be able to recover your capital. Forget about making profit on that. Excuse me. And this stock has been a terrible underperformer, Sumit. Even short to medium term traders or investors have burned their fingers. Long-term investors have suffered very badly. We don't cover such stocks, so I won't give any specific. But again, I'll say the same thing. Try to protect your capital and take appropriate steps at remedial time.
That view, and thanks so much for that, Gaurang. But another caller from Andhra Pradesh now, Bharat, has a stock query for us. Bharat, good morning. Welcome to the show. What's your query?
Good morning, sir. I am holding 500 shares of Happiest Minds at the price of 445. So can I hold or average?
And is this a long-term pick, Bharat?
No, sir. 3 to 4 months.
3 to 4 month pick.
I will go to Vaishali, madam.
Got it. Vaishali, on Happiest Minds, of course, there was fundamental news flow of guidance being raised in terms of revenue growth, and hence that big uptick. But do you think it's that move is continuing in the next 3 to 4 months?
I would say technically it is showing signs of revival. Totally on technical parameters, I think continue holding or average out with a support of 360. And I think the stock can go towards 440 to 450 in times to come. And from there on, we can have a relook. So for now, one can average out.
Dira Banu from Vijayawada is holding 10,020 shares of Suzlon, bought at a price of 72.19 rupees. Should hold or sell? Any view on this, Gaurang?
I couldn't get this. Is that 10,000 shares?
10,000 shares bought at a price of 72 rupees. Suzlon.
Well, honestly, Sumit, I hope this was not a short-term trade turned into a long-term trade because of loss. Never expose yourself with such a huge amount of investment or number of shares, because you are exposing yourself to high risk. We have a positive coverage. I would rather dare to say that if she's got investable amount or the investor has got an investable amount, can average over here, because you got in at 71 and the current price at about 40, 41, 42. So you can average small quantity and bring down your cost of acquisition, but we have a positive coverage.
Got it. The next question, that's coming in, it's on Canara Bank, and Arvind from Mumbai is actually asking this question. He holds 2,000 shares, bought at 160 rupees per share. So he's almost in a loss of almost 45,000 right now. He's asking how long could it take for a bounce back to those levels from a 1 year perspective at least. What would be your view, Gaurang? Is there a way that there could be some reprieve from this price for Canara Bank?
I hope it is, because the acquisition price is our target price. That's the sad part of this particular investment. But yeah, available at some downward correction. If you can average current over here, then I think it will bring down your acquisition price. Stay invested for long term. We have a hold recommendation on Canara Bank.
Okay, Namita from Siliguri is holding 250 shares of Quest Corp at a price of 285. Vaishali, should she continue to hold this counter?
Quest Corp.
Yeah.
Well, the current price is 185 and it is on a downward trajectory, but it's just today's candle which is showing some bounce back. So now that held on for so long, keep stop loss of 170 and maybe you can be lucky to get the price of 210 again.
That view, Vaishali. So he had gotten all the three counters post the demerger as well. So currently he's sitting on a loss, but that's Vaishali's view. But we have another query on WhatsApp. Kannan from Mumbai actually is asking a question on SpiceJet. Now, Gaurang, he's holding 900 shares, but he's bought them at 73 rupees per share. Stocks, of course, trading at 13 now. So he's sitting on a loss of almost 53,000. What should he do with this now? What would you recommend?
Firstly, we don't have coverage. Secondly, there are a lot of reasons available in the public domain, Puneet, as to why you should stay away from this stock. You know, the biggest mistake that retail investors do is look at the stock price and buy the stock, which should not be the case. However, we remain positive on the aviation sector. The largest low-cost carrier in form of Interglobe Aviation is something that we've been posting for many, many years. And this one is going from down from bad to worse, Puneet. Again, the same situation. Your capital is eroded almost about 60-70%. No specific comments since we don't have a coverage. Request Vaishali to help out over here.
Vaishali, a quick view if you have. I know it's a very volatile counter, but any?
Well, this has been continuously making new lows, so I would say avoid. If one has to, then Interglobe is the favored pick. Exit from stock.
Got the view. But let's go across, take our next caller from Qatar, and Matthew has a stock query for us. Matthew, good morning. Welcome to the show. What's your query?
Yeah, good morning. I hold around the 223 shares of Oil India, the price of 381. So I want to know, should I hold on and what would be the long-term price target, if you can say? Thank you.
Got it. Well, hopefully, Matthew, everything is good at your end as well. But Gaurang, he's in a profit for Oil India, bought at 381. Should he continue to hold his 223 shares now?
So let me give a word of caution regarding the optimism about the oil exploration companies, Puneet. This bounce that you are seeing in, rightly mentioned, and I also mentioned, is all because of the bump in the crude oil prices. If there is de-escalation, the situation has to come back to normal and free passage of sea vessels in the Strait of Hormuz, crude oil prices can even crash 5, 10%, 15% the way they have gone up. Having said that, we used to cover Oil India a long time back. Our targets were in place. So we have removed the coverage. Currently, we don't have coverage, but on the exploration side, we remain positive. ONGC and GAIL are the coverages that we have currently on the fundamental side.
Got the view, Gaurang. But time now for the second round of the rapid fire in this edition of Ask Profit. Gaurang as well as Vaishali know the drill. The first question coming in from Nalini. She holds shares of Motherson Wiring at 46. Gaurang, should she continue to hold her 100 shares?
I'll give it a pass. We don't have coverage on Motherson Wiring.
The next query is coming in from Chandran. 400 shares of Venus Pipe, bought at an average price of 1,290. Gaurang, should he hold?
I'm sorry, we don't cover this one as well.
Vaishali, any quick view on Venus Pipes?
Continue holding. We can see the stock going towards 1150.
Vedanta, bought by a viewer, Sai at 725. Gaurang, should he continue to hold with the demerger, the split?
Definitely hold on. We have a positive coverage and I think there will be value locking as far as the demerger is concerned.
The next query is from Gyaneshwar and it's on HDFC Bank. He has bought 200 shares at a price of 933. Should he hold, sell or average, Gaurang?
Hold and average would be the recommendation. Attractive valuation, downside is protected.
Vani wants to know if it's a good time to add L&T from the long term. Gaurang, what would be your view?
Don't even think twice. Please go ahead and do. And this is also one of the stocks wherein I'll say, please invest and do in a SIP if possible, because whatever is getting destroyed and damaged in the Middle East, West Asia needs to be rebuilt, and that's when L&T will come into focus.
Raghu from Tirupati is holding 1,050 shares of Nalco. The next view for the next 3 months here, Vaishali.
Well, currently it's doing very well, so continue holding and look for higher targets of 420 and higher.
Is Dr. Reddy's and Sun Pharma preferred pick in the pharma space for the long term, Gaurang, is what Ramesh is asking.
Dr. Reddy and
Sun Pharma.
Dr. Reddy and Sun Pharma. So we have positive coverage on both Dr. Reddy and Sun Pharma. Yes, they are investment ideas.
Right. The next query is from Raj from Gujarat, and it's on PFC. He's holding 1,000 shares, bought at a price of 375. Should he see a value of 450 here, Vaishali?
Well, it is doing quite well, so continue holding, and all likelihood you will see those targets.
A power name that you like right now, Gaurang, is what our viewer has a question on.
Couple of them: Tata Power, NTPC, JSW Energy, and Torrent Power.
The next query is from Jake from Kochi. It's on TTK Prestige, 140 shares, bought at a price of 584. Should he continue to hold this for the next 2 years, Gaurang?
So I think a lot of traction in terms of induction plates, hot plates. Sumit, and virtually sold out from a lot of state retail outlets. We have a positive coverage on TTK Prestige. We have an accumulated stand also on TTK Prestige.
Is it the right time to add Eternal, is what Maheshwari is asking. What would you recommend, Vaishali?
Yes, accumulates because it's already started moving. 190 is the support, so every dip is buying opportunity.
Well, that's the end of the second round of the rapid fire as well as this edition of Ask Profit. But Vaishali, thanks so much for helping us down over the last hour of solving these queries. Gaurang, thanks so much for joining in, helping us on the fundamentals on such short notice. But viewers, that's all the time we have on this edition of the show. Stay tuned to NDTV Profit. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
बिटिया की शादी है हमारी.
बधाई हो बधाई हो.
कुछ पैसे मिल जाते समय पे लौटा दूंगा. जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं.
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं. केपरी लोन्स फर्ज निभाते हैं.
In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit, for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, a very interesting company today we have got for you. And remember, there's a lot of buzz happening, especially in the energy sector. But before that, let me give you some hints. Company karti kya hai? Some hints on that. The first one is, it's from Hindi hinterland. The company is Raipur-based company. I'm sure you must be getting it now. It's related to minerals and metals maybe. Yes, you're right. The second guess is it produces both steel, ferroalloys and power. Especially power is something which the company is focusing at. And the third important situation is that stock is up 12 times in the last 5 years, and that is a very big multi-bagger for a lot of investors. But ye company kya hai? What's the company all about? Let's get that detail in. And one more hint is there, that the company's name is also a part of a jumbling of my name as well. The company's name is Sarda Energy. To be precise, Sarda Energy and Minerals. This is the company which we are talking about. But why are we getting this company right now? That's the question to be asked. The first reason about this company is definitely going to be on the energy business growth potential from all the sectors. The company is majorly focusing on that. Of course, there is a minerals business also, but the company wants to focus on this in the next 2 to 3 odd years. What's the outlook on the Kalyani coal mines, the expansion which is happening? How much integration is there? What are the important timelines? That's what we'll be asking the management. The third important situation is the Godavari Power. They have taken almost a 0.22% stake in it. Is there any acquisition rationale behind it? It might be a minor one, but nevertheless it has raised eyebrows. The progress on the expansion of the Garma Palma coal mine, that is what we'll be talking about. Management has spoken earlier in the interviews with NDTV Profit, but we need to get some incremental information on that. The outlook on the raw material pricing amidst the geopolitical tensions. Is there a rise in pricing environment happening in which they are operating their businesses? Also the volume growth outlook, for the minerals and metals businesses. They are legacy businesses, some of them, but nevertheless we'll understand what's the growth outlook for these companies. Also the bidding pipeline for the other power generation companies, because they recently had a successful generation order company acquisition. Now they might be looking at other places as well. To decode this, we'll have Nilay Joshi, is the executive director at Sarda Energy, to give us the entire picture of where the company stands and what are the important industry growth levers. But let's come in and let me explain you what are the key details about the company which you should be tracking. And of course, there's a lot to it. This is companies are already engaged in these 3 important parameters which we spoke about earlier. We are repeating that, and also going ahead, let's see which point is important. They are transforming from metal company into an energy-led integrated company. That means the valuations which the company is enjoying is not just of a metal company. There is an energy element to it, and now energy has become the core growth driver. So whenever this situation changes, the valuations, the perception of a company in the stock markets also change. Mining is supporting the cost control. That's where the transformation is happening. We have seen that in the long-term basis also on the charts, how much it has become a multi-bagger of sorts. The metals still remain stable, nothing much happening. It's a legacy business. They know the ins and out of it. The energy contributes over 2/3 of EBITDA, and this is where the alpha lies. EV/EBITDA ratio low, या P ratio लीजिए, then you'll understand what's the difference which is happening. SKS Power is operating at 81% of plant load factor. This is also very much important, and the entire focus right now is on the energy segment. There's a strong integration happening with the captive coal mines also, and the way the global situation or even the domestic situation is coming in, power and energy is the sector to be in right now. Hydro portfolio, that's around 167 million total wattage, you could say, actually, of which are operational right now. So that's what we'll be talking about. And also 50 megawatts of solar power project is also underway as well. So you can see it's a renewable, non-renewable play, both clubbed in together. And the future total energy capacity target is 1000 plus megawatts. So that is a very big target for the company's size of almost 18,000 crore market cap. The energy defining company's growth trajectory, and that's what the company has been harping across their exchange filings. A slight revenue decline was there in the third quarter on planned turbine maintenance, which we had already seen. The impact was already seen earlier, but the question is what's happening in the fourth quarter. In the third quarter, one more important thing is that energy continued to dominate the earnings mix, and that's all. We have seen that in the EBITDA numbers also, and the core earnings momentum still remains intact. So going into the future, it's going to be energy, energy and energy. The capacity expansion for thermal is the IPP producers, they have acquired 600 megawatts of power, and if you look at the thermal segment, this potential could add double. That means it could become 1200 megawatt as well going ahead in the future. There's expansion plan in the hydro segment as well. The commissioning is of almost 24.1 megawatt of power. Remember, hydro business is still lumpy in a country like India, and this is the overall development which is happening in the hydro segment. So the focus should definitely be on the thermal part and the solar part. And 50 megawatt of captive numbers have come in. The mining is also their important business. They are in Chhattisgarh, they are located, where India has a lot of metals and mining business as well. This is largely, we see an integration at play. It's already a mature business, and when a business becomes mature, the growth numbers don't become so much because the base is only so high. They have tripled their capacity in the last 3 years. And remember, mining is important for resources also, be it the EV or the new age economy, which really needs a lot of sources. Coal and iron ore assets are expanding. That's the second growth lever coming in for the minerals, and they are ensuring the captive fuel security. This is very much important in today's time because of the disruptions which we have seen from the Middle East, which is impacting the energy security of India as well. And also they try to reduce the input cost volatility. This is coming in for the mineral business as well, and also stability which comes with that. But apart from this mineral segment, the important situation is the minerals would be the next growth lever. Energy, we spoke about it at length, but then in the second order of priority comes minerals. That's also very much important, and integration is something which they are looking at for both steel and ferroalloys, which will help the overall operation. This is a stable legacy business I'm talking about. सबसे पहले energy था, फिर आया minerals, अब आया metals. It's stable already, and that is where we are seeing the volume resilience definitely coming in. And at the end of the day, everybody wants to preserve energy, and when you do that in an integration setup, your margins improve and your bottom line numbers also improve. So this is the important total setup for the stable legacy business which I'm talking about for Sarda Energy and Minerals. So this is the entire picture. 3 sectors, order or priority I've explained you, but interesting thing I want to explain you is how the stock will be judged in KYC. There are 8 rating parameters, and of course the usual holy grail of financials is very much important. This includes income statement, balance sheet, cash flow. These are the 3 numbers which is definitely going to be important to judge the company, and the return ratios, kya returns aaye, that will be very much important. But I'm talking about ROC, return on capital employed. Apart from that, shareholding, we'll see how much FIs, DIs, there has been a movement or not. Street cred, I've already mentioned you the stock is a multi-bagger, but in the short term, has the company made money or not? That's the question. Valuations, we'll try to compare that with its own history as well, because the company is having 3-4 businesses. The sum of part valuations become a bit difficult to judge it with a peer. So making it an apple-to-apple comparison, that's what we'll be looking out for, and the outlook as well for the industry and for the company as well. So totally 8 rating parameters would be coming in, but the first one let's focus on, and that's the income statement. And largely income statement, the performance has been decent, but is it really very strong? The EBITDA numbers fluctuate in this kind of business model, and that's what we have seen. PAT numbers, not major growth coming in. So it's the 3-year CAGR comes in negative, but did Q3 numbers show a turnaround? No, it didn't. So largely the numbers were, you could say, slightly muted if you compare that on a year-on-year basis. The margins also saw a dip from 28% to around 24%. The long-term average is around roughly in that phase. So there was nothing really bad or really good in the numbers going ahead, and that is how the functions work in a business. And remember, this is still a commodity-led business which is trying to move towards the energy segment, and the major contribution is coming, almost 75% of it, from the energy segment as well. Net profit also largely flattish, so it's a neutral rating when it comes to the income statement. Let's see what's there in the balance sheet. Balance sheet also, the company is expanding, they are acquiring, so the borrowing levels, that has gone up. It's around 1 crores for FY25. A little bit of concern or lumpiness comes in, but the debt to equity ratios are still, you could say, decent. It's not, it's very high or something when you compare that with this equity and the borrowings. But looking at the cash bank balances, that is also decent. You just have a look, it's around 608 odd crore rupees, but it's a very working capital heavy business and expansion is happening, so we need to wait and watch. So net, it's a neutral rating when it comes to the balance sheet as well. We spoke about income statement, we spoke about balance sheet. Let's see how cash flow works. And remember, out here also cash flows might not be, all the way up or all the way down. There is a little bit of lumpiness because the business model is as such, but the company has surprised. That's why I'm going to give this a strong thumbs up. Why? I'll tell you. The cash flows from operations have been really going up. It's around 886 crore rupees, and you see that from FY23 it has been increasing, and that's a stable cash flow from operation coming in, and this we are seeing the good conversion also coming in. Of course, the net cash flows inflow, there is an investing and operating income. Apart from that, financing activities is there. So it's better to check these three criteria to understand where the company is lying, and the cash flow management for a company operating in this industry is good, and that's why I've given a strong thumbs up when it comes to the cash flow segment. But return ratios, what it matters, of course, FY22 was a year of aberration. Higher side the numbers came in, but after that it has normalized, and if I saw the last 10 years, the average is around 15 to 17% of ROC returns, and that is decent for a company like that. So largely it has normalized when it comes to the return ratios. I'm talking about the ROC. So the normalization, it's fine, but it's not great as such because this business model is only as such. So it is a neutral rating when it comes to the return ratios. Let's talk about the shareholding, and there's nothing actually to talk about the shareholding because you guess there is no change happening. Promoters' stake at 73% is still stable. It hasn't changed yet. The FIs and DIs, they have also, I would say, largely under-owned for a company like this. It's just 18,000 odd crore market cap. So maybe in the future, as the company's market cap increases and some inflection points change, especially with the company claims to become energy focused, that is where we might see these numbers going up. But as of now, all of them are flat. So it's a neutral rating when it comes to the shareholding as well. But let's give you some more perspective on the stock. Stock kitna kamaya hai, kiske liye kamaya, kyun kamaya? That's the big question. But I'll just explain you the pricing movement. For last 1 month, the stock has been flat, kuch hua nahi. Also, let's pick up the other key, durations, whether the stock has made money or not. For last 6 months, no, the money hasn't been made. If you have invested, stock is down 13%. This year itself, the stock is flat. Remember, there was a massive sell-off in the mid-cap and the small-cap space as well. So, company has actually maintained itself, if not gone up. So, that is a brownie point which the company has earned. But if you're a long-term investor, congratulations, you have made a killing in this stock. Let's just see this in the last 5 years, 1145% of returns, almost 12 times your capital has increased if you have stayed with the company for the last 5 years. So it has been a multi-bagger as well. For long-term investors, it's been a great bet. For medium-term, short-term, the company has shown, you could say, a technical prowessness, but nevertheless, the returns haven't been made. So net, it's a neutral rating when it comes to the street cred. Let's also talk about the entire pictures of the valuations, how things are matching right now. And currently, the valuations are at 15 times. The 5-year average, you look at it, that's 14 times the forward PE ratio I'm talking about. At the peak level, when there was a lot of euphoria in the mineral and metal segment, that is where we saw the valuations going up to almost 21 times. So there is a correction happening, but the long-term averages, we seem that we are at even Stevens right now. So it's a neutral rating when it comes to the valuations. So we spoke about 7 rating parameters, but the 8th one is very much important, and to be honest, the most important, since it's forward-looking. It's about the outlook. Where's the direction the company going for? The company is focusing on the energy segment as well as its core offering to the investors and the stakeholders. Almost 75 wattage of energy capacity is expected to be coming up. This is a gigawatt. And also the mineral business vertical, that has a second major lever of growth as well. So the first priority is energy, the second is mineral, and the SKS power potential, the newly acquired acquisition, there is a plan to double the capacity as well. This approval process for the capacity expansion is also underway. So this is an important trigger for the company as well. And also, overall, this is the entire setup coming in. But the overall rating, after giving a thumbs up to the outlook, let's just give it the revisions. Largely neutral for income statement and balance sheet. Cash flow, the maintenance has been really done well. That's what the last 3 years data suggests. Return ratios are decent, in line with their average historical trends. Shareholding, street cred, and valuations, all of them are doing some kind of a justice to the analysis. Valuations also closer to their 5-year average as well. Outlook is something which I really like, with the growth prospects coming in. The company becomes an integrated energy player as well. So overall, let me give you the total KYC rating, and it's largely at the in line with what numbers we generally give. It's 5 out of 8 for Sarda Energy. And to give us more perspective, we'll be joined by Nilay Joshi. He's the Executive Director at Sarda Energy and Minerals. Good afternoon, Nilay. It's always a pleasure to have you. The stock largely, exactly.
Good afternoon to you too.
Yes. And Nilay, the first question is definitely going to be on you. Your company being projected as an energy player right now, the way the focus is moving on. We saw the EBITDA contribution also. So now, as an energy play, what the company is doing, what are the growth levers in the energy segment as your priority business segment?
So see, right now we have about 1 gigawatt of operating energy assets. That is between thermal power, hydropower, and little bit of solar, which will start from the coming financial year. In the medium term, say over the next 3 to 4 years, we would target to double all these capacities. So maybe move from 1 gigawatt operating to about 2 gigawatt operating. How the path to that is also quite clear. So we plan to double the capacity of the SKS power plant, which is actually a brownfield expansion. Similarly, we plan to double the hydropower operational capacity, and where already we are working on 75 megawatt worth of projects, and we are looking at a few more. So we hope that in the next 4 years or so, we should be doubling hydropower capacity also. And then we have minor 50 megawatt solar coming up. So all in all, I think over the next 4 years, we should be doubling our operational power assets.
Right. So you'll be doubling up the operational power assets across segments. That's something to watch out for. But Nilay, I just want to understand what are the current debt levels of the company and any kind of debt reduction plans in the future?
So if you look at us, we were earlier a mid-sized long steel manufacturer, and that business is a cyclical business, and that is why we diversified away from that business to energy and minerals. That business, because it was cyclical, we always kept the balance sheet, managed it in a very conservative fashion, keeping the debt levels low. And that remains our priority going forward. So even if you look at, we expect that by the end of this financial year, hopefully we should be net debt free. On a standalone level, we are already net debt free. On a console level, hopefully by the end of the financial year, we should be net debt free. That is including the debt that we took for SKS expansion. So the balance sheet is very strong in terms of liquidity,
Exactly, and that liquidity impact is of course getting to be seen in the cash flow segment also. It's really managed quite nicely. But apart from the energy segment, also the mineral business vertical, that's the second lever of growth you're talking about. What are the important expansion plans? And if you could just give us a little bit of timelines of your key projects for this.
Yes. So we have one operating thermal coal mine, which is the Gare Palma 4/7, where over the last 3 years, we have continuously done capacity expansion and taken the capacity up from 1.2 million tons to now 1.8 million tons. And for further expansion, we have already moved applications, etc. Further, we have 4 more coal mines, which are all high-grade coal mines. And we expect that all of them will start operating over the next few years. First one being the Shahpur coal mine, Shahpur West, which will come on stream in the coming financial year. So because all of these are high-grade coal mines, we expect the contributions to be much higher compared to thermal coal, because this coal is used in steel making.
All right, but Nile, another question is there regarding the raw material pricings. There are geopolitical tensions have increased their pricing, and this is applicable for all of your business segments, just not one. And there is a second order effect at play. Any kind of jump in your raw material price, and if yes, any pass-through mechanism, or will you take that hit in this quarter?
No, so there are two things. One of the larger inputs for us is thermal coal, of course. So those prices, I think that mineral is in abundant supply in the country due to the continuous efforts of the government and the PSUs. That supplies have gone up over the last few years. So thermal coal, there is no impact. On the other raw materials like say iron ore or high-grade coal, yes, prices have moved up. But then at the same time, end product prices have also gone up. So if you look from the last quarter, end product prices for most products are up in the range of say 10% or so. So I don't think there will be any major impact as of now. But then, situation is volatile because of the ongoing war scenario. So we need to keep tracking this.
Right, Nilesh. That means there might be an impact at least in this quarter as well. But nevertheless, apart from the raw material pricing, if you could just give us the progress timelines for the expansion of the Garma Palma coal mine. That's what everybody's talking about. And there was recently a positive news flow also coming in from your company. But we just want to know the important timelines for it.
No, so Gare Palma, like I said, we already last quarter we received the approval. In Jan, we received the approval, for 1.8 million tons. That will be achieved in March, by March of this financial year. And for further expansions, that process is underway, and I think over the next few years that will be achieved. But beyond that, like I said, already high-grade coal mines are coming up, becoming operational over the next few years. The latest will be Shahpur West in the coming financial year.
And Nile, any other bidding pipeline is there for any other power generation company? SKS, though we have discussed a lot, but any other companies, which are there on the pipeline where you are bidding?
No, we continue because, we have continuously keep assessing the entire landscape and keep participating in different bids. So as and when the opportunities arise, we always evaluate and participate, and let's see how things go.
Okay, so of course the evaluation is something which you do it on a continuous basis. But just a minor query coming in from a lot of stakeholders of Sarda Energy, and they have asked about the rationale. Why have you acquired almost a very minor 0.22% stake in Godavari Power Ispat? I mean, you have given it as a market transaction, but nevertheless, just wanted to get some clarity on that. Is there, why was this acquisition there?
Yeah, so it is just as a part of our regular treasury operations. Like I said, we are sitting on almost 2,000 crores of liquidity. So it's a very small thing, not even hardly 1% of my liquidity. So it's just a part of the regular treasury operation, nothing else.
All right, so regular treasury operation is something which you have mentioned regarding the minor acquisition of stake in Godavari Power Ispat as well. Well, apart from this entire setup, any new age energy sector, like suppose in the hydro segment, you are talking about expansion in solar also, are we looking at any other new age energy related growth outlook going ahead?
No, so we keep evaluating, all sort of upcoming energy space, be it battery, be it nuclear, whatever, but they are all evaluations like any other company. As of now, there is nothing new that we are doing. We are focusing on our existing core businesses that we understand well and which we have run over a period of time. And as and when opportunities arise, we'll see.
Right. So the focus is on the core business and, of course, the energy, minerals and the metals pack. Thank you very much, Anil, for giving your time and clearing a little bit of queries coming in from our viewers at KYC. It's always a pleasure.
Thank you so much. Thank you for the time.
Yeah.
Thanks.
So that's the management of Sarda Energy. The stock has been a multi-bagger, and interestingly, the stock is focusing especially on the energy segment. That's where the management wants to focus on. And the debt levels where the questions were asked, they have stated that the working capital numbers are on the higher side and a little bit of treasury operation actions is definitely happening on the stake of Godavari Power Ispat. So that's all, folks, for Sarda Energy. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Ragon with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
momentum. Nifty managed to hold on to 23,800 while Sensex jumped more than 700 points today. Advance decline ratio tilted sharply in favor of advancing stocks. Most sectors are in the green, barring only metal sector that lost some shine. IT is the biggest gainer. Auto and realty lead the gains. IDBI Bank in the spotlight. Sources tell NDTV Profit that the Cabinet Secretary will hold meeting with Deepam and other key ministries next week. This as the centre remains committed to divesting its stake in IDBI Bank in FY27. Major relief coming in for the flyers in India. Government has stepped in to curb extra charges on the seats, mandate 60% seats to be allocated free of cost for seat selection. Passengers on the same PNR will get seats together. Hello and welcome. You've joined us on Markets at 12. I'm Nisha Podar. Let's take a look at the market. And yes, it's year-to-year smile for most of the market today with a huge amount of gain. And remember, this is the third trading session in which the market is continuing with the gaining momentum. And this one, today's trade has been the strongest. So Nifty 50 reconquering the 23,800 mark after several trading sessions. And remember, if you really take a look at the 1 week chart of Nifty 50, it had really gone down, created a turf, and then has picked back or is picking back. So that's a good momentum that is really showing. Let's take a look at the overall market. Well, Bank Nifty, which is a quasi-investment into the economy, which had gone under a lot of pressure because of the rupee depreciation, crude prices rising, and balance of payment worries coming in. Well, Bank Nifty is the one which is also gaining in trade, but remember, it is underperforming the key indices at the particular moment. But what's really outperforming is the broader markets. Both mid-cap as well as small-cap index are gaining over 1.5% and much more than the key indices, because those are the smaller stocks which lost the most and now are becoming much more palatable to the market at mouth-watering valuations probably, and therefore buying seen there. But when we talk about the sectoral performance, IT sector, which went through its own bit of volatility, is coming out very strong, 4% gain on IT sector index, and that's really adding a lot of momentum to the market. In fact, all the sectors are in the green, barring only the metal sector, which, remember, because of the global metal prices really going up because of the supply chain constraints, were looking overvalued, and therefore some profit booking seen only in the metal sector. In terms of the performance coming in, it's the big boy from IT sector, Infi, which is gaining the most and contributing the most, along with Bharti Airtel, L&T, TCS, some of the names to mention. And on the downside is the big banking name HDFC Bank, which is taking the brunt of any bit of really nervousness about the economic reasons. So that's one counter which is a drag. Sonam Srivastav, who's the founder and fund manager at Right Research PMS, joins in now with her expert take on the market. Sonam, always a pleasure to welcome you on NDTV Profit. Today looks like a good day of trade, but the volatility in the market has been quite accentuated. After 3 days of gaining momentum, Sonam, does it look like that the market is getting a little more comfortable with normalization of the present situation in crude prices? Do you think the worst is behind us?
See, it looks like it. I think the market reaction definitely hints at that happening. You can see 3 straight days where, we've seen strong recovery. I think the crude prices have also cooled off. They've gone from 100 to 92. And I think, on the global markets right now, I think the escalation in Iran hasn't cooled down, but I think things are coming back to normal. There are ships that have passed through the Strait of Hormuz also. And I think, the markets had corrected a fair bit and we were expecting a recovery. So, we are taking it constructively, and, the recovery was bound to happen now or later. And, it seems like the recovery is happening right now.
Right. And Sonam, you have a view on the IT sector. It has seen a fair bit of volatility. There are days when it's completely beaten down, and today it's surging 4% in trade. What's your in-house view on the tech sector and the pivot to AI, and is that disruption already priced in most of the counters?
So I think the pivot to AI and the disruption definitely is priced is more than enough in most of these stocks. Right? If you look at stocks in the IT sector, the IT index itself in the matter of a few months has corrected more than 50%, right? Almost 30 to 50%, right? If you're looking at from 2025 highs, right? And I think the evaluation of the IT stocks right now is cheapest across the board, right? These are large organizations which have enterprise contacts, and you're seeing the pivot happen even within the Indian IT towards more IT adoption. So I think in terms of valuation, these stocks are right now dirt cheap, and it might be a good time to accumulate. But yes, I think projection wise, we'll see some disruptions happen with AI, but the prices right now are at a very attractive level.
Right. Sonam, you were talking about the IT sector, and yes, IT sector has seen it being repriced as per the new momentum. But in this particular market, while most of the experts were already saying a cautious deployment of cash at lower levels and in safer bets like bigger companies, how has that particular strategy now changed with the market showing some bit of stability?
See, I think like you were commenting earlier that the broader market is having a bigger recovery today, right?
Yes.
And that's bound to happen given that, the extent of correction was also larger in the smaller stocks, right? And, I would sort of be of the view that it might be a good time to accumulate, small and mid caps also. We won't be just biased towards large cap quality in these levels, especially, at this level of correction. You've seen the market correct almost 12% from the from the February levels, and the recovery seems to be happening, and I think your attractive growth stocks, mid and small caps will participate in the recovery, right? So I don't think it would be a bad idea to actually at these levels, at the current levels, it might actually be a very good idea to buy small and mid caps.
All right, so small and mid caps, the broader markets, which had been beaten down a lot, now at comfortable valuations. But Sonam, looking at the overall market, two areas did not lose much momentum. One was the consumption FMCG space, which is more domestic led. And the second is the green energy space again. So these two spaces were less impacted also because of the in-house demand that comes in from the country. Which are the pockets at the particular moment in either broader markets or even the in-tech stocks, which you think that the areas are much better in terms of a medium-term investment?
Right. So like you said, consumer stocks right now have started to look attractive, and we are also looking at a few internet-based consumer stocks that might be attractive. I think, with the crisis in the Middle East, the crisis might calm down, or the Strait of Hormuz might normalize in a matter of couple of months. But the biggest concern would be from the oil prices and how does that impact inflation in India, right? So with that view in place, I think what we would avoid is sectors that have crude exposure, for example, paints and chemicals, etc., until unless you see a solution to the crisis. And yeah, I think like you said, consumer looks attractive. We are seeing a lot of interest in autos, auto ancillaries, even industrial manufacturing segment, right? So I think those are the type of stocks where we are seeing a lot of interest right now. And you mentioned green energy, the data center theme, right? I think all of those are quite attractive.
Right, Sonam. So those are some very interesting topics that you mentioned, and the areas where there is momentum building in terms of investments. Thank you, Sonam. It's always a pleasure to really take your expert take on the markets. Thanks so much for joining us on NDTV Profit.
Thanks a lot. Yeah.
Thank you so much. Now, the Middle East war cannot be ended without ensuring normalcy and safety of the Strait of Hormuz, which, remember, has become the main bone of contention. That's the word also really coming in from James Dorsey of S. Rajaratnam School of International Studies. In fact, listen in to his commentary on the war situation and its impact.
Donald Trump is in a bind. He's created a situation in which he, at this point, cannot credibly exit the war. To credibly exit the war, he essentially has to expand it, not something that he necessarily wants to do. The Iranians have gained a major stronghold by controlling access to the strategic Strait of Hormuz. There's no way that you can end this conflict without guarantees for free passage of shipping through the Strait of Hormuz. To achieve that at this point, either the Iranians, you have to find a deal with the Iranians that meets that requirement, or you have to impose it.
Right, so that's the important word really coming in. Let's take it straight to an important discussion. In fact, Atul Mehra, the MD and CEO of Axis Capital, is joining in now live to chat about the overall IPO and equity capital market in a very volatile and also the sell-off that the market has seen. Atul, always a pleasure to welcome you on NDTV Profit. My first question, of course, 3 days straight, the market has been building momentum. There is some comfort. Is this comfort for real? And how is the volatility in the market and the recent sell-off and the global situation really impacting the market in your view?
Too many questions. Permit me to answer them as in an order. So we have to understand India is a very vibrant capital market. And I say so for a couple of reasons. Number one, it is a very resilient economy. Number two, it has many great companies which are managed and run very well by entrepreneurs and professionals. Three, what we are seeing out over here is because of the unique characteristics of Indian economy and the demographic profile, we are seeing a huge amount of resilience which is being offered through financialization of saving, which is coming at the forefront and providing a great buffer or a resilient for the economy. What is very interesting out over here is look, the markets have cracked by almost 7% in the last 1 month, I would say. But we, as you rightly said, we have seen a pullback of around 2 to 3% in the last 3 days. And this is a great recovery. To my mind, what we say this is a dislocation. This is not a fracture. This does not require any major surgery. We need to just sit back, relax, be patient, be calm, rethink about the risk, recalibrate our strategy, reset our expectation, and I think most of us will be home and dry.
Right. Of course, Atul, you have seen many cycles in the past 3 decades of your career, and you know how the cycle really performs, and you just need to patient and ride through that particular cycle. And I'm sure that this is the same advice you're giving to all your clients. I want to understand one important aspect, which is the IPO market, which has been a huge momentum builder when it comes to private equity or VC investors exiting, or even the founders finding their space in public market, creating new segments, and on the other hand, the shareholders coming and getting their returns from them. This whole ecosystem has done very well in the last year. And of course, a huge pipeline has been built for this year as well. How is the situation and the mood? Are the decisions being pushed to when there is lesser volatility, or will we still see IPOs trickling in the market?
So Nisha, a little bit of correction. we have seen a resilient capital market for not last 1 year. We've seen it for the last 4 to 5 years. And this is the longest, I would say, a sustained capital market bull run that we have seen for a long time. The good thing about this is what is the thread, what is the fabric behind this bull run? The quality of companies that went to the capital market was far, far better. We've seen participation from all categories of investors, be it foreign institutional investors, be it sovereign funds, be it the domestic mutual funds, be it the pension funds, be it the private equity, be it the wealth investors or the man on the street. So we've seen a huge participation from every category of investor. Fast forward to 25, 26, again, the pipeline is looking very robust. We have some very high quality companies, some very large companies which are planning to tap the capital markets. I see no reasons, I see no concerns that they will be successfully able to raise money in the capital markets. Yes, because of what we have seen of a steep correction of 7 to 8% in the last 1 month, I think it was a pause, and the pause was much needed. I think with the 2 to 3% correction improvement that we have seen in the last 2 to 3 days, it's a matter of, I would say, a month, and you will see actions back in flow.
That's right, actions back in flow. But Atul, I want to understand, with this change in the scenario, I'm sure that there will be many opportunistic deals as well in the market. In fact, the economic, parameters for many of the countries, companies and sectors may have changed because of the pressure coming in because of global tension. How do you spot the M&A transaction and opportunities in a market like this? And what are those trends that are really probably just developing at this point?
So, Anisha, again, I say this out of my experience. M&As don't happen because of market situations, and particularly in this kind of a dislocated market. M&A happens for fundamental reasons, and the fundamental reasons could be many, many. Interestingly, if you look at it, M&A is no longer a taboo. People do M&A for variety of reasons, and those reasons are very logical reasons to do M&A. When you do an M&A, the buyers were in good old days only strategic investors. Which means one corporate buying another corporate, or one MNC stepping into India to buy the Indian entity. Today, we have very vibrant, large private equities who are very much interested in being the front leader in taking over such companies and what they call as a strategic control acquisition. So today, there is a very dynamic market, and trust me, M&As don't increase because of the market condition. M&As happen throughout the market conditions, regardless of the sentiments in the market. Yes, to the extent financing of M&A becomes relatively easier or difficult depending on the market condition. That's the only lever that is there.
Right.
But M&As have to be looked in as a separate strategic action.
Right. So, Atul, to your point, and absolutely, the valuation mismatch right now would have put a lot of deals in the back burner, you think?
On the capital market side?
Both. Capital market, fundraising is becoming also difficult in this market?
No, you have to again understand. There is a valuation expectation that everybody has in mind. And when I say everybody, I mean the investors or the promoters have in mind. As long as the expectations are by and large met, there is no challenge at all. And Nisha, what you should understand is that markets are very vibrant. Yes, public markets window may be shut temporarily for 2-3 months, but you have private equity, which is very, very vibrant at this point of time. All my friends in the private equities are rolling up their sleeves, sharpening their pencils to look at such opportunities. It is a great opportunity for them to do investing rather than harvesting.
Right, and finally, Atul, at this particular point, I want to understand also what are the key trends on the deal street that you're spotting at the moment, which will pan out in the next few months?
So, look, as I said, markets are very vibrant across the products. What you're going to see as a trend is 6 or 7 industries which are traditionally old industries still being at the forefront. We will see increased activity in the banking, financial services side. Consumer is a great industry. Industrials gaining a lot of traction, and I would put power and energy in the industrial segments. You have e-com, which is again a part of consumption story, playing very, very well out. You have real estate, which is steadily performing. And you have some of the emerging economies which are doing very well, such as EMS and data center. And as things move forward, couple of more opportunities and more sectors, which I can't name right now, will throw open. We see a huge opportunity in India.
All right, your confidence and positivity on the deal street, Atul, is very infectious, and that's exactly what the market needs right now. Thank you so much for all your insights and, of course, many trends that you shared with us. Thank you so much.
Thank you.
Thanks. All right, moving on. After a few consecutive green sessions, the market is flashing early signs of a bottoming out phase, looks like. However, the rebound has been narrow. Only 58 out of the 492 stocks delivered the positive results or returns since the war really began, highlighting selective opportunities rather than also broad-based recovery for the market. But amid this, there are a few stocks which reflect solid return potential. Can they really deliver? It's a very important question, and my colleague Sharad is getting us all the answers and explaining this matter. Tell us, Sharad.
Well, you see, importantly, this is a war period. There was a massive correction coming in important stocks. And remember, I put a filter of a 5,000 crore market cap, and at least the stock is tracked by 5 analysts. But what's more important is the signs of, a pullback. That rally has already started, and we could see that the market has been in the uptrend in the last 2, and of course today's session included 3 sessions, and this is very much important. Also, out of this analysis, 58 companies out of the 492 have given positive returns since the Iran war started. But nevertheless, we have taken the stocks which have fallen the most in this criteria and the return potential as well, and these are the stocks which should be on your radar. Birla Corp, the war impact was more than almost, you could say, 22%. But look at the return potentials which are happening. Most of these stocks are more than 50% return potentials which are there. This also includes Sapphire Foods, Signature Global, Spine Labs, and JK Lakshmi Cement. Another group of 5 stocks I would like to point out where the return potential is on the higher side, more than 50%. The war impact, this includes 5-star business, KPIT, EPL, Mrs. Bector's Cremica, and from the IT space, there is Newgen Software as well. But let's understand each stock's story. What are the upside and the downside looking like? For Birla Corp, of course, the premium cement is supporting the profitability, while on the other hand, Sapphire Foods, there is a little bit of downside when it comes to the margins remaining under pressure. Also, let's look at the other group of stocks apart from this. Signature Global, new developments and JV is something which the street is bullish on. But on the other hand, Pine Labs, if you look at it, the brokerages have turned bullish, especially on the monetization front. Also, the next group of stocks includes JK Lakshmi Cement. The realizations impact is on the weaker side, while on the other hand, 5-star business, the street is bullish, especially on the improvement in the slippages which is coming in. Also, EPL, we see here largely beauty and cosmetic segments is doing the trick for this counter, while for KPIT, the demand trends are suggesting the European business is going strong. We saw that in the 3rd quarter as well. And lastly, Mrs. Bector's Cremica, the growth outlook is improving in FY27. And Newgen Software, large deals have seen a slowdown, but nevertheless, today also the IT stocks have been buzzing in trade, and largely 2 stocks from the IT have also made it to the list. So we can see a good pullback from these counters as well, as analysts are most bullish on, and they have corrected also significantly during the war period which ended, or we could say that the markets tried to bottom out from Monday onwards. So these are the important stocks which can give a good pullback.
All right, Sharad, quite an exhaustive research. Thank you so much for all those details. Let's also focus our attention on one particular counter which has shown a huge amount of event-based impact. And we're talking about IDBI Bank, the disinvestment of which has been on the anvil for quite some time. The stock is finding comfort at around 75 rupees per share. But if you really take a look at the 1 week stock chart, remember over the last 1 year, from 50 rupees, the stock had elevated to over 100 rupees per share in anticipation of the deal that the government was trying to strike. And with this particular deal now pushed, the stock has been re-rated. Now, the fate of IDBI's disinvestment process may be really decided next week, as sources tell NDTV Profit that the cabinet secretary is set to hold meetings with DIPAM and other key ministries soon for this particular matter. In fact, all these exclusive details with my colleague Shrimi, who's joining in with all the details on this. Shrimi, tell us.
Yeah, that's right. Government is reassessing its next move on the IDBI disinvestment after receiving the lower bid from two potential bidders, lower than the minimum reserve price. And what we have been given to understand that the Cabinet Secretary TV Somnathan is expected to hold a very crucial meeting with all key ministry, including DIPAM, who is handling the disinvestment, to chart the way ahead and how they will go about the IDBI Bank stake sale. And in fact, two options are on table at this point of time. One, to start rebid of the IDBI stake sale, and for that they had to start from the scratch. Considering being a sensitive sector, they had to go to the all through the due diligence all over again. And the second option is to pause the disinvestment process as the market volatility stabilizes, and then possibly start again maybe middle of the next year. So with these two options, what we are also learning from the sources that they are looking at the minimum reserve price mechanism as all after this episode to perhaps make some changes to avoid market manipulation is also something they are considering. So for now, next week is very, very crucial, where the government is going to take a call, the final call rather, on the IDBI Bank disinvestment, whether they will go ahead with the rebid or they will pause for the time being.
All right, Shrimi, thanks so much for all those exclusive details. Nifty 50 losing that 23,800 level. So keep a watch on that. It's out of time on Markets at 12, but keep it with NDTV Profit. Thanks so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you.
Hello and welcome back to NDTV Profit. You're watching Trending Stocks. My name is Puneet Zaveri. With me is Sharad Dubey, and over the next half an hour or so, we'll try and put the focus on the key stocks that are trending in trade today. Also get you a key important conversation with the management as well. But to start with, Sharad, it's been a strong day yet again today, right? Above the 23,700 mark. What are some of the key aspects of the market setup that you're tracking? Thanks a lot for that, Puneet. A very strong set of opening we saw in the markets, and there also we are near the day's high level. Little bit of correction, but we are comfortably above that 23,700 mark right now, and we are almost 200 points up in the day's trade. Nifty Bank story remains the same, but a little bit of a downtick coming in as compared to Nifty, and we'll explain you the reason why, because ICICI Bank and HDFC Bank are not participating in, but nevertheless a good basket buying is happening across the counters. Likely that FI short covering is at play as well. But let's just see the key factors to watch out for in the day's trade, and we can confirm and say that this is the third straight day of gains coming for the indices. Of course, volatility was there on Monday and Tuesday, but it seems like now the volatility is coming down and we are going towards much more bullish moves. The options data is suggesting a relief rally is likely to sustain at key levels, even if there is a small downtick, a technical bounce back might be there. That's what the data is suggesting. Nifty setup is still stronger than Nifty Bank because of the drags which I mentioned earlier. But if you look at the other key trigger to look at, that would be definitely, apart from this, the FI heavy IT stocks. They have seen the biggest short covering, and Puneet, this is not only the large caps, this is the mid cap IT and even product based companies where the short covering is happening, so we can expect some good numbers in the evening as well. The value buying is seen in SMIDs. This is very much important because across the parameter we are seeing a good buying happening in the quality names as well, and that augurs well for the breadth of the market. India VIX and rupee is stable as of now, not a big concern, and actually the VIX is keeping on falling as well. Apart from this, the global cues, how it's moving, is definitely the market, the war fatigue which is there in the markets. That is actually, market is moving on. It's looking at new triggers, be it the AI or even the FMC meet from US. That's expected to be status quo today as well. So these are the important reasons why the market is being placed on a green basis right now for the third straight day. And yes, definitely a little bit of stability is coming in the numbers. Over to you, Puneet. Well, thanks so much for that, Sharad, getting us some key updates, and definitely FOMC is something that we'll track. It's also pertinent that the banking index, and that's the first stock or the first space that we're looking at in our watch list today, largely under pressure today are the large cap banks. Now, while we have been talking about or the expectation that there won't be any rate cuts today, at least from the FOMC announcements, a lot more on the commentary will be something to watch for the banking names tomorrow, today as well. MMTC is the other stock that we're in focus today. A crucial selection meeting by PESB will be something to watch. JBM Auto back in focus as a key volume buzzer today. IT stocks getting some favor there from CLSA. They maintain their view, and the only brokerage essentially that has not cut target prices as such at this point of time. They see almost 100% run up or the upside on Coforge, and stocks up almost 5.5% today. The capital market stocks are extending the rally at this point of time, while Mankind Pharma is also something that we're tracking. The company has announced the acquisition of Rivotril at this point of time, and that particular brand from Roche, and hence the stock is in focus. PVR2 is definitely one of the key stocks that we're continuing to track today. The Dhurandhar 2 frenzy is something that I'm sure everybody, every viewer, and even I know the Sharad is tracking very closely. So you are looking at that release tomorrow, from today onwards for the paid ones, and from tomorrow onwards. So hopefully you get to catch it, but will be a stock in focus as well. Eternal seeing buying from the lower levels, and you are seeing divergence across brokerages, but a key stock that we continue to focus on today. Varun Beverages is also the other stock that's on our focus and our radar. The company has done an acquisition of almost 131 crore in South Africa of a non-carbonated drink, so of a dairy brand essentially, and their focus continues to be on reducing the percentage of the carbonated drinks space in their portfolio in their basket. Asahi India, another key volume buzzer. Sterlite Tech stocks up 22% in the last 1 month, and so is Chennai Petro at this point of time, given one of the keys in the oil and marketing space is one of the key ones that we're tracking because of the Israel-Iran war. OneSource Solutions is the other one. Management change, stocks down 23% in the last 6 months. And ITI is the other one that we're tracking on another volume buzzer. But arguably, one of the key stocks for today has been Urban Company. SBI MF has bought stake of almost 632 crores in the company, and stocks flying up in trade almost 15% at one point of time. And D Development is the other one on the downside that we're watching out for. A Middle East war impact has also come in on this stock as well. But it's time now to put some of these stocks in the rapid fire round. And Sharad, what are some of those that you picked up today?
Well, thanks for that. Joining us is Gaurav. Good afternoon, Gaurav. Always a pleasure to have you. We'll start our rapid fire buy, sell, hold, especially with the large cap bank. There's a little bit of selling pressure coming in, and they're not participating in the rally. Remember, they're FI heavies. Important levels for both ICICI and HDFC Bank.
Yes, HDFC Bank has not participated yet. Rather, it is having a toll on the overall markets. Good afternoon, Sharad. With this, as far as the levels are concerned, 820 remains an important support, while 850 will act as a resistance point. Breakout expected above 850 levels.
And Gaurav, your views on MMTC is largely a cash counter, and news flows come in very few. But when it comes, the volumes do pick up. Any kind of strategy for that?
I think it is very difficult to catch up MMTC. Whenever it rises, it just rises and flies like this. It goes up the same day or 1 or 2 more days and it went off. So I think one should consider start profit booking around 64 odd levels. That is the best I can say.
And Gaurav, your views on Sterlite Tech, what are the important levels to watch out for?
Sterlite Tech has been a stellar performer as such, from 82 to clearly doubled on 92 plus levels, and it still looks optimistic. 2002, 2005 odd levels are pretty much possible. I'll advise traders to take a stop at 185.
And Gaurav, your views on OneSource Solutions, what are the key levels to watch out for?
So OneSource, it is a kind of a flagpole pattern pretty much visible on the daily chart. Breakout expected over 15-20 levels. So I'll advise traders to wait for that level. Once that breakout happens, it will fly towards 1650. Until then, it is a hold.
Gaurav, Urban Company has been on a tear. Of course, SBI name coming in the block as well. And today also stock is doing really well. Good time to do a little bit of profit booking on this counter. Or do you suggest that a medium-term basis, there'll be more follow-on buying?
I think a follow-up buying towards 135 and 140 is pretty much likely. So one can hold on to a position, take a trailing stop at 126, keep rising the stop loss with every rise in price.
Right. And D Development stock has taken a tanking on adverse impact on the Middle East operations. Any important stop losses for D Development?
you can take a stop at 275 on closing basis.
All right. Apart from these, two other stocks would be in focus: JBM Auto and Chennai Petro. These are the two stocks. Either of these stocks, anything looking attractive on them?
JBM is looking good. 13% rise in price today, backed by stellar volumes. I think more upside is pretty much possible. A move towards 580, 600 is quite likely. Traders can hold on to this position. One can add more at dip around 535 odd levels. And as far as Chennai Petro is concerned, it has been a good performer. Any dip towards 975 should be utilized as a fresh buying opportunity.
And Gaurav, Asahi India Glass and ITI, which of them look better?
From the glass segment, Asahi India has been a leader, whether it is industrial glass or automotive glass. I think this stock is good to hold from a long-term perspective rather than taking a short-term bet here. So at current levels, one can consider buying it here. From a medium-term standpoint, 800 should be a stop loss.
All right. Important levels. Thanks a lot for this rapid-fire segment, Gaurav. And over to you, Puneet.
Well, thanks so much for that. So definitely a lot of stocks are buzzing in trade today, but let's also put the focus on which stocks are, trending stocks on Google currently. Let's pull that up list for you as well. Definitely a few that are buzzing in terms of volumes as well, but Adani Power, PFC is up almost 2.5%. Urban Company, we did speak to Gaurav about it, up almost 18% and counting at this point of time. IDBI Bank is another one that's trending as well, and so is Moil at this point of time, seeing a lot of surge as well, not reflected yet in terms of the movement in price as well. But Gaurav, a very, very quick question on PFC. In terms of volume surge, it is buzzing in trade today, but also on PFC as well as REC, because the merger is impending. Both those stocks continue to be in focus. Any view on either of them for investors at this point of time?
Both stocks are equally good, no doubt about it. As of now, PFC catches my eyes too much. Good amount of a price volume breakout is pretty much visible. It was a consolidation range from which the stock broke out. In today's session, almost 5% of fresh OI built up is also seen, which clearly indicates that even the derivative action is supported by this up move. So it is quite likely that this up move would continue, and a level close to 450 is pretty much possible. So from a short-term trading standpoint, it is a hold. One can even consider buying this stock for a medium to long-term perspective.
Well, Gaurav, we leave it at that. Thanks so much for joining in, giving us perspective across a whole bunch of stocks and spaces for today. But it's also important to focus on a key new D-Street debutant, and has reported stellar set of Q3 numbers. I'm talking about Omnitech Engineering. Now let's pull up the stock and you'll see that buying happening just in the last hour of the trading session. So up almost 8% as we speak. Companies reported solid set of earnings, revenues up 81% in this particular quarter. But to talk more about the company as well as their first results post-listing, I'm now being joined by Mr. Uday Kumar Arun Kumar Parekh. He is the chairman and managing director of the company. Mr. Uday Kumar, thanks so much for joining in. Firstly, many congratulations on the listing as well as your first results. We spoke just before your IPO and there was a lot to talk about. So just give us some perspective of what led to this stellar growth in Q3 performance. We've seen revenues almost up 80%, profits are up over 100%. Is that sustainable yet again in Q4 for you?
Yes, definitely it is sustainable, because historically, if you see our last 2-3 years and beyond that, so we have grown with a very good CAGR growth of around 30% of the growth trajectory. And we are having a strong order book. Like today's as on today, it is a 2,900 crores, which is significantly showing a customer trust on Omnitech. So that makes us to more grow on that trajectory. So apart from that, if you see, we have also grown by EBITDA by 110% and strong revenue accelerations by around 80%. And similar, we are also projecting in the coming quarters, we are trying to perform on that aspects.
Right. Mr. Parekh, good afternoon. Sharad here. What's your current order book status and the growth outlook coming in for 2026? And if any sectors where the order book might be getting skewed towards?
Yeah, coming to the future growth trajectory, we are having a strong order book of 2,900 crores. Of course, in the energy segment is significantly high on that, but the customers who are having the long associated, and now we are going into the more value chain into the process, and that is making us a more offering a high value added product to them. So in the coming years, we are also expecting we will be performing good.
Kumar, just one question on your order book. Since you've been speaking about it, it's almost a 10x jump that we've seen in the order book size now at 2,900 odd crores versus almost 289 crores that it was at the end of FY25. Is this largely because of one big order, or have you seen multiple big orders over the last 9 months, which is leading to this huge jump?
So if you see overall in the retail, there are a multiple order, and these pipeline we have tried to build in last 3-4 years of a rigorous development of the different product, different assemblies, different capabilities and everything, which have resulted in these times. So which is as on today, that's what's showing as growth in our order book. But this we have invested so much time in last 3-4 years.
What has led to the jump in just these in these last 3 quarters? Because a 10x jump is quite stark, Mr. Uday Kumar. So is that because of one particular customer?
No, it is having multiple customers.
Okay.
There are 2-3 large orders, but apart from that, there are a significant customers are there. And apart from these, we have also, if you see our previous records, we have also repeated customers, which is primarily around more than 80% of our business. So that is also keeping a customer very much trust on us, Omnitech. So that is allowing us to deliver the growth trajectory. I like to add in this we have a capacity to be built, and with the IPO prospect, we are able to deliver our capacity and revenue to the customer. That is also making us eligible if we customer can trust on the deliver the large revenue numbers.
So, Uday Kumar, your net working capital has actually, inched up to almost 256 days at the end of H1 of FY26. Now, for FY25 levels, they were roughly at 283 days. So, it has been high for some time. Where do you expect it to go? Maybe post at the end of Q4 or Q1, if you can give us some perspective, where can we expect a reasonable number of days where you can fix this?
Yeah, see, historically we were around the 200 and around the range. But when we are expanding and when we are ramping up any of the customer and any of the segments, initially our working capital goes on the higher level, and that has shown some improvement into 280 days to 256 and like that days. And we are also observing and we are working religiously into the disciplined way into the organization excellence to improve that working capital. So we are very hopeful it will come down again.
To come down to Mr. Uday Kumar, what could be any quantification to this number for net working capital?
So, see, it again depends on the new, some of the verticals, what are the orders we are executing, but it will be improved. So exact benchmarking is pretty difficult, but if we see our historical numbers, we should be land near to that, but over the times.
Mr. Uday Kumar, we leave it at that. Thanks so much for joining and giving us perspective on your Q3 results, as well as what could be some expectations going over the next couple of quarters as well. But let me welcome in Mahesh Ojha. He's the VP Research Business Development at KC Securities, who's also joining in now. Mr. Ojha, thanks so much for joining in. I'm not sure if you have looked at Omnitech during the listing or post Q3 result, but a quick view on the stock.
Definitely, we are tracking the IPOs, and Omnitech, it's definitely we have tracked. Omnitech, if you're looking from an Omnitech perspective, there is a large scale opportunity in the stocks for upcoming time. I think any investor who are having more than 9-12 month horizon, they can hold easily. But if you're looking from a IPO perspective, stock has done really one from 190 to 236. So any cool down between the 220 to 225 range, then again we can see some more buying opportunity. But if you are having a 9 to 12 month horizon, then you can see any upside trend. I hope that company can do very well in upcoming time.
View, Mr. Oja, but the IT pack, and we spoke about buzzing on the back of the recent update being a CLSA note. Now, what CLSA has specifically mentioned, and there you go, see almost a 1100 point uptake on the index that we are seeing today. There was a recovery of almost 600 points from the lows yesterday of 28,200. So you're seeing almost an 1800 point jump just in the last 2 days. And what CLSA has actually mentioned is that at this point of time, they find no evidence of increased deflation in the renewal contracts with its customers. So IT companies which are going to their customers, they are not seeing any deflation or reduction in price. They feel that the demand commentary for BFSI continues to be strong, but for the other sectors in the auto pack, in the healthcare pack, currently is remaining soft at this point of time, including retail. They've also said that few companies have flagged off slight delays in decision making by clients because they are on the sidelines looking at what new models Anthropic as well as OpenAI have been introducing. But the direct revenue flow from the Middle East currently is quite constrained in just low single digits. So you won't see an impact of the war, at least on the IT pack. Deal pipeline also remains strong. They maintained a high outperform rating essentially on Persistent as well as Coforge among a couple of stocks, and said that valuations are quite reasonable. In terms of the outperform ratings, the stocks on your visible on your screen right now are some of them: Infosys, TechM, TCS, as well as LTM entry, while they feel a hold call on Wipro as well as HCL Tech is justified at this point of time. But Mahesh, anything in the IT pack that you like post the correction? Stocks like Coforge have slipped quite meaningfully in terms of PE derating. But would you agree with CLSA at this point of time? Is it a good time to buy some of those counters, and what would those be?
Definitely, if you're looking from an IT perspective, I think IT has done overdone. From my perspective, there is a lot of opportunity, and many fund houses started giving low P to IT stocks. But if you're looking from a TCS perspective, there is a high dividend yield TCS will providing. So from my perspective, if anyone looking from a IT perspective, then TCS will be preferred. Apart from TCS, Tech Mahindra, Coforge, and that are the preferred pick from our side. Our stand is accumulation from IT perspective. Yes, definitely, it can take some more time because after some clarification, after some dust settle, we can see some more upside in IT. But yes, definitely from these level, we are accumulation. We are advising our client for accumulation in IT stocks.
Okay, so accumulation in IT stocks is something which Mahesh is advising his clients. But moving on, Mankind Pharma stock is buzzing positively in trade. An important acquisition announcement has come in. To give in more details, joined in by Varsha here. Varsha, what are the key details for this?
Well, Mankind has acquired Rivotril, a brand from Roche for India. Now, what they will do that they've gained exclusive rights to manufacture, market, and distribute this product. And of course, the Rivotril, if you see, is a reference brand and is used in the CNS disorders. Now, talking about why this matters, this adds a strong portfolio or a brand with high specialist recall, strengthen Mankind's focus on a chronic and CNS therapy, and of course supports expansion of its neuro portfolio. And this fit into Mankind's push into a chronic segment through launches, and hence an important launch for Mankind, and hence you're seeing the stock is up almost 2%.
Thanks a lot, Varsha, for that. Just wanted to get in, Mahesh, your views on Mankind Pharma, especially on this important acquisition. It's also a GLP-1 play, and its domestic-facing business is largely there. Your fundamental views on that?
This is a good counter for accumulation as well. But if you're looking from a medium-term perspective, I think some downside can't be denied from these levels. But if you're holding from a 9 to 12 month, I think a 2,500 level can easily come on these levels. And yes, stocks giving the fact that it's positive for stocks.
The other counter that we're also tracking is Varun Beverages. They're expanding beyond the carbonated drink market. Acquisition of Crickly Dairy Company of almost 131 crores is what they've announced. This one is an acquisition in South Africa and key for the company's diversification at this point of time. They've also diversified into valued added dairy as well as juice based drinks as well. So these are the new categories, and through its arm this acquisition has taken place. Now what's important is for calendar year 25, you can pull up the carbonated drink share. Now on a consolidated basis, it's at 59%, but for India, it's still at low 46%. So you're seeing the other geographies like South Africa, Morocco, as well as Zimbabwe having almost 90 to 100% share of a non-carbonated drink portfolio. And hence, you continue to monitor these acquisitions in the non-CSD space as it is known as well. In terms of its growth strategy, the company has mentioned and launched new products as well in the 10 rupee price bucket in India. So looking to increase that share from 46, as well as since it is also a low GST products now, the non-CSD share is at 5% versus 40% for the carbonated drink portfolio as well. So interesting acquisition at this point of time, Mahesh. But on Varun Beverages, post the correction, do you feel it's a good time to buy into this counter now?
This is a good buying opportunity. Is giving BBL from 510 level. This is corrected from up to 400 level. So I think stock has a really good upside in it. I think 500 level plus easily can come. But if you're holding from a 12 plus month horizon, then 600, 640 level can also come in these stocks.
Well, Mahesh, we leave it at that for today. Thanks so much for joining in, giving us your views across a whole bunch of stocks. But viewers, with that, that's all the time we have on this edition of Trending Stocks. That's from myself, Sharad, everyone who put the show together. Thanks so much for watching. Keep tuned in to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company.
Three-day winning streak boosts Dalal Street sentiment as Nifty remains near 23,800. Broader markets outperform benchmarks. Most sectors, meanwhile, trade in the green, barring metals that lost some shine. IT, media and realty lead gains. IDBI Bank in the spotlight. Sources tell NDTV Profit that the Cabinet Secretary will hold meeting with Deepam and other key ministries next week. This as the centre remains committed to divesting its stake in IDBI by financial year 27. And major relief for flyers. Government has stepped in to curb extra charges on seats, mandates 60% seats to be allocated free of cost for seat selection. Passengers on the same PNR will also get seats together. Good afternoon. You're tuned into Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, a very quick look at the markets right now, and it's a testament to patience. Investors who are holding on should be smiling ear to ear, just like the market is right now. So when you talk about Nifty as well, it's hovering close to those 23,800 levels. About a 200-point uptick coming in for the Nifty. When you talk about Sensex as well, about a 700-point uptick also coming in there itself. When you talk about the list of sectoral losers as well as gainers, it's actually IT that is back in the spotlight as well. So is metals as well. When you take a look at the list of sectoral losers or sectoral gainers, in fact, barring one. So metals is the only sector that is holding on right now to a tinge of red at this point among the major sectors. IT, like I said, back in the spotlight, 3.5% uptick coming in there. Realty, auto, consumption, rural and bank, those are the sectors that are gaining exactly in that order. When you talk about the list of gainers as well, from within the Nifty 50 pack, it's no surprises there because it's Infosys, Tech Mahindra, HCL Tech, some of your IT counters that make it to that list as well. About a 3.5% uptick coming in for a couple of those, and about a 4% uptick coming in for Infosys and Tech Mahindra. When you talk about TCS and Wipro also making it to this list, Eternal, yet again 3.2% uptick coming in for Eternal as well, and something like a Bharti Airtel also holding up quite well. On the flip side, what's not doing well right now is Coal India with that 2.5% cut coming in, NTPC, Cipla, HUL, and even heavyweight HDFC Bank yet again down about 0.5%, not doing any heavy lifting for the markets. Same can be said about something like an SBI. And when you look at the broader universe as well, you're looking at something like a Solar Industries, Vedanta, Hindustan Zinc, and NTPC as well, that's on the back foot. So largely that's the kind of setup that you have right now when you talk about stocks as well. But let's also talk to you about the world of commodities And if you have been perplexed of late in terms of the kind of bull run that you're seeing in some of these commodities, and if you're wondering why industrial metals are back in the spotlight, really snapping that sort of consolidation that we've seen for the last few decades, let's get you a decisive voice on this. Let's get you some more insights to try and understand why you have been seeing this kind of bull run when it comes to the entire commodities complex as well. In fact, Naresh Kataria, who's a private investor, is joining us on the show. Mr. Kataria, a very good afternoon to you, and thank you so much for taking time out and joining us. First things first, it is actually a little perplexing for investors when they're looking at the entire commodities universe. After a decade of underperformance, you do have some clear evidence at this point in time that commodities might just be entering a sustained bull cycle. Is that something that you're looking at right now as opposed to a tactical rally?
Yes. So, hi Shreyansi, pleasure to be here. So, of course, there's a tactical tailwind from the war for commodities. Crude is up, aluminum is up because Middle East is a major supplier of aluminum and that's facing disruption. But I do feel that we may be in a structural commodities bull market. I think the last bull market peaked in 2011. 2001 to 2011 was the last major commodities bull market. And it's been in a sustained downtrend for the last 15 years on a relative basis. Of course, some commodities have done well. But if you look at either the commodities allocation to investors via ETFs, it's at multi-decade lows. What used to be 12%, all commodity ETFs combined. I mean, commodities ETF as a share of total ETFs was 12% at the peak in 2011, is now 3%. And unlike the last bull market in commodities, which was driven by the core industry, this time I think even the data center and energy transition themes are actually driving as a tailwind for commodities, I feel.
No, absolutely, and I'll come to that in just a bit. I also wanted to try and understand your thesis a little better when it comes to the entire bull run. If this is truly a new commodities regime that you're possibly looking at, is there anything that stands out to you in terms of a worry right now? What's the biggest risk that you see that could derail it right now?
Obviously, if the world goes into a major slowdown, which happened in 2008, it was amidst the commodities bull market, and then the world entered a major recession. And the entire commodity pack fell. Even gold fell 30% in 2008, for example. So I think the biggest risk could be the major derailment of world growth, which can, if the global geopolitical situation doesn't sort out, and let's say if crude goes much higher and it slows down world growth, that would be negative for commodities demand in general.
No, absolutely. And coming to something else that you alluded to as well, when you talk about aluminium, you're looking at supply risks rising, and you do have the substitution bit also kicking in. Is aluminium the most underappreciated trade in this cycle that you're looking at, and why does it make it to your list then?
So I think both copper and aluminium are having major tailwinds from the two major themes which are playing now. One is data centers, and other is the energy transition to solar. And everything to do with data centers is now or mostly driven by power. Whether you need power to drive the data centers, or whether the underinvestment in the grid which has happened worldwide, or the energy transition theme where you need a lot of aluminium and copper for transmission generation. I think all of it is driven by copper and aluminium. Why I talk more on aluminium and less copper is India is more endowed for aluminium. We have complete backward availability of bauxite and power, while copper we are not so well endowed. And the beauty is both copper and aluminium go together. If you see the long-term chart, both go pretty much in tandem. Of course, the rate of growth can be different, and that's one theme which I think what I have practiced it is whenever copper aluminium ratio goes above 4, currently it's about 3.75. Whenever it goes above 3.75 or 4, the substitution kicks in from copper to aluminium because some part of the demand is fungible. So I think everything related to data centers, energy transitions, and power has copper and aluminium tailwinds, and I would rather play aluminium because India is very well endowed for aluminium companies.
No, absolutely. That is the entire bit on aluminium as well. Just getting back to what you said about the data center boom as well as copper, how are you seeing that tailwind really emerge? And do you think right now, as things stand, do you think that investors might just be underestimating that part right now?
The total announced capex, data center capex by the US hyperscalers, which was running at about $200 billion per annum 2 years back, is expected to be $700-800 billion next year. Bulk of it will go in chips, and then the second biggest demand will be on power, whether it is backup power or whether it is everything related to, or to just run the data centers is going to consume a lot of power. So I believe, unlike the dot-com boom, when there was an ongoing boom for metals and commodities in general, this time the data center boom itself is a major driver for commodities and in general non-ferrous metals.
No, absolutely. And are there any other trends emerging when you talk about industrial metals? Because they seem to be coming out of a little bit of a multi-decade consolidation, if you will. How are you looking at that entire bit play out?
So if you look at capex, I think that's one of the best drivers to long-term cycle. So PwC comes with a mining report which has been coming out for 20 years. So they give the annual capex, and the beauty is capex lags commodities, because as commodities go up, more capex comes out. And last time the capex peaked at about, this is for the top 40 companies. So PwC has a report to track commodities capex for the top 40 companies. And that peaked at $130 billion in 2014, after the commodities bull market peaked in 2011. We are not even there. We are still below that $130 billion amount, which is, the last report was 2024 capex, 88 billion. And I think the bull market, as even just looking at the capex, looks like having long legs, because we are underinvested in commodities in general. And added tailwind is that for everything related to data centers, energy and energy transition, you need more non-ferrous metals.
No, absolutely. And if you're just tuning into the program, viewers, you should be listening to that advice and really trying to turn that investment also up, take a closer look at some of the data trends also that we've pointed out for you right now. But I also wanted to get the monetary policy bit also into the conversation. What do you think about the current monetary policy action across the globe, and how that also really acts as a tailwind or not right now when it comes to this commodities bull cycle?
I like to look at macros which have a lead value. Most macros have concurrent value, but I think we get lost in those macros. So if you track the monetary policy stance of all major central banks, they have been in a rate cutting spree for the last 1.5 years. They were on a rate cutting spree post-COVID, tightened, but last 15-18 months, they've been in a rate cutting spree. And those rate cuts lead the commodity cycle by 15 months. So even that positioning, I believe, is favorable for commodities. And obviously, we have now the demand tailwinds from AI, data center, energy transition, and the underinvestment in capex. I think it's overall adding to a good mix. Of course, different commodities will do differently. But in general, I think the commodities basket is telling us good stories. Several commodities are at all-time highs. Commodity indices are at all-time highs. The refining ETF in US is an all-time high. So I think commodities are giving a signal that probably there's a change of regime ongoing right now.
Absolutely. And do you think that it's still early stages when it comes to this bull cycle as well? Because you do, like you pointed out, have about 35 banks thereabout also cutting interest rates. You do have a bunch of triggers that are yet to play out. When you talk about gold particularly, and we'll come to the detailed part of the conversation when it comes to gold a little later, but when you just talk about gold as well, lower interest rates, in fact, increase the opportunity cost for something like gold and the sister metal silver then. So how are you then looking at the point where we're placed in this particular bull cycle?
As of now, actually, there are temporary tailwinds, further tailwinds which have emerged, and I don't know whether they're sustainable because war has led to an increase in crude oil, aluminium, and petchem prices. So I think that's a temporary tailwind, and it may go if war were to subside. So I would just be careful. For example, aluminium is up 15% since the war started. Copper is flat. Because copper doesn't have any Middle East supply, aluminium is supplied, about 8% of global supplies from Middle East. So I think there are some tailwinds which have come, or some temporary bump ups have come. I would just be careful to discount that if war were to end. But yeah, I think the larger bull market is on. And coming to gold, it's been in a bull market since this leg of the bull market started in 2022 when Ukraine war started and US froze $300 billion of Russian reserves. I think that was the key trigger which lit the gold bull market, because people are, or at least the central banks are wanting to diversify away from gold. I believe that is on because the global geopolitical setup for reserve currency is very volatile, very untrustworthy from a central bank perspective, various countries. So if I were a central bank, I would look to de-dollarize. I would look to hedge my central reserves via having exposure to gold. But if you see how gold behaved just at the start of the Ukraine war, gold actually consolidated for some months before taking off, because when a war starts, there is a frenzy for liquidity, which has happened now. Most risk assets had come down and dollar went up. Gold also has corrected a bit or has consolidated. But looking at the longer cycle for de-dollarization and diversification away from USD, I believe that gold's bull market is on and may just consolidate for some time.
No, absolutely. And I believe that a lot of investors in the gold market also agree with that bit of de-dollarization as well, echo the same sentiment, because that has been quite the driver when it comes to the year 2025 as well. But right now, when you zoom in on gold as well, Mr. Kataria, it's not been behaving like a classic safe haven asset, if you will. So do you think something has structurally changed here in terms of how gold really trades?
So, yeah, I'll keep my ears and eyes open because gold is a large asset. It's a $30 trillion market cap, all gold combined, because all gold mined is mostly still there. It doesn't get consumed. It's a very large asset class, but it is still, I think, under-owned in financial portfolios. The total holdings in gold across all US portfolios is probably 1% or lower. India, of course, owns a lot of gold. Indians own a lot of gold. So, but yeah, I would wait for, if there was even within the larger bull market in 2001 to 11, gold corrected 30% in 2008 because there was economic dislocation. So I would just, I think, be prepared for consolidations, corrections in a larger bull market. But I believe gold's bull market is very much on.
Absolutely. And very quickly, before we let you go, just wanted to get a sense of what you think about everything that is playing out in terms of oil as well with geopolitics. How much do you think, is a genuine demand supply imbalance, or how are you looking at oil right now?
Yeah, it's anybody's guess because it depends on how I think this Middle East crisis plays out. And that's a point of vulnerability for India. So what we have modeled on a quant basis is that if crude is already 100 and it's up 50%, whenever this has happened in the last 20 years, it has not worked out very favorably for Indian small caps in the coming 3-6 months. Of course, crude's importance to Indian economy has been slowly coming down, as Mr. Ridham Desai has been saying often from Morgan Stanley, that crude's impact on India's fisc, India's current account has been gradually reducing. However, crude still is a very important part of a lot of things which happens into India. So on where crude can go is there just too many levers at play on how the war ends and how China and Russia look at it in terms of what they want, what is in their interest. Obviously, in Russia's interest to let the war linger so that it keeps bad for them.
Right, no, absolutely. And that is something that we're yet to see completely play out as well. But thank you so much for taking time out and joining us. So there you go. That's the entire outlook as far as aluminium is concerned, the data center capex story is concerned, and commodities being at the start of a bull cycle is also concerned. But with that, completely timed out on this segment. See you on the other side with more news and updates.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
To understand the Tamil Nadu twist, join me in the midst of people, language and politics Vanakkam Tamil Nadu. Here we come.
Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi. In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number one on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice.
The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice.
The latest trends. It's a lot simpler. We'll help people.
Welcome back. Thank you so much for staying tuned in. Well, if you've been tracking the updates as far as the LPG supply crisis is concerned, there's some good news for you. Another Indian flagged oil tanker named Jagladki carrying around 80,800 metric tons of crude oil reached Mundra port in Gujarat after completing its journey from the UAE. In fact, Paras Tama is bringing us the latest when it comes to this one.
It's between America and Iran where the war is continuously on, and the main route, sea route, which is affected is the Strait of Hormuz, where every day lakhs of vessels travel and carries LPG, crude oil and many things for many countries. In that, India is also a very important part, where India also use Strait of Hormuz sea route for their LPG and crude oil. With the help of the diplomatic channels, in few days there are few vessels which has passed the Strait of Hormuz and came to India. The first ship carrying crude oil came to Mumbai. After that, Jamnagar port and Kandla port in Gujarat, and the third vessel in Gujarat has come today at 3:15 a.m. near Mundra port, probably 10 to 15 nautical mile away from here where we are standing right now. This is on my right, it's Mundra port, you can see that, and from Mundra port there are 10 to 15 nautical miles away. This whole vessel has come. It's Jagladki vessel which is carrying 40,000 metric tons of crude oil, which is very, very crucial for India in a situation like that right now. There is no problem right now of LPG and the crude oil as per the government, but as a precautionary measures, every diplomatic channel has been opened by the government, and we can see the results. The vessels are coming continuously, and it will be very important to see now what will happen next, how government will go on this particular issue, and how this diplomacy will work further for India, as this many vessels has been coming in the different part of the country, and now the one vessel which came 3:15 a.m. in the morning, Geopolitical, has been docked inside the deep sea, 13, 14, 15 nautical miles away from the Mundra port, and now the process of discharging the crude oil will be started soon. It has been docked over there. 2 ships will be sent to the vessel and doing all the processes over there. Both the ships which will be gone from the Mundra port will reach the vessel. Discharge process will be started, and after the discharge will be done, these 2 ships and the crude oil will be sent to the different part of the country. So it's a sigh of relief for India, and more vessels is expected as per the sources.
A sigh of relief indeed. Paris, thank you so much for getting us that bit. So there you go. Geopolitical is in the Indian ports as well after the diplomatic channel was opened. But moving on then, at a time when drones are increasingly associated with conflict, you do have Bengaluru that is using the same technology to transform healthcare delivery. You are talking about a startup right now, Airbound, that is in partnership with Narayana Health, successfully piloting drone transport when it comes to blood samples across the city, has completed over 700 flights with 0 failures across nearly 2 months. In fact, Dr. Devi Shetty, founder and chairman of Narayana Health, has been closely involved in the initiative. My colleague Deepak caught up with him about this project that could take healthcare logistics to the skies. Let's go across and listen in.
Usually I would see you, in the hospital and have a conversation with you about some cardiac surgery that you've done or something to do with healthcare, but there are drones behind you. And the reason is that you've decided to now use drones instead of across the world. We're looking at a very destructive purpose why drones are being used. But today we're talking about drones being used to save lives. Tell us how you're partnering with drones to really ensure that healthcare reaches everybody, becomes accessible and cheaper.
We are in the process of building 4 or 5 new hospitals in Bangalore. And these hospitals are smart hospitals where only the people who are going to touch the patient are going to be there in scrubs. All the others will be working remotely. All these hospitals are smart and paperless. And these hospitals, one unique thing is they won't have a lab to do the blood tests, or they won't have a blood bank to store the blood. So all these services are supported by Airbound, which is the drone company, which takes the entire logistics by sky from the small hospitals to our big hospitals in Electronic City. And by doing it, we believe that the cost of healthcare will go down dramatically. The time taken for the blood testing and the results coming will go down dramatically, and patients will have the results in no time.
All right, and that's all that we could pack for you on this edition of Lunchtime Trades. Thank you so much for tuning in. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf Meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it mattered.
Welcome to NDTV Profit. My name is Varsha. Well, Powerica, which provides or offers a comprehensive range of generator sets, is set for an IPO. The IPO date starts from 24th March and ends on 27th March. The total issue size of this IPO is around 1100 crore, out of which fresh issue comprises of rupees 700 crore. But to speak more about the IPO and what are the utilization of funds and what are the growth targets ahead, I'm here joined by Mr. Bharat Oberoi, who's Chairman and Managing Director at Powerica, and Pradeep Gupta, who's whole-time Director at company. Welcome, gentlemen, at NDTV Profit. Pleasure to have you. Let's start with you, Mr. Oberoi. Just wanted to understand in simple language and in a quick way the business model of Powerica.
Varsha, good morning to you and to the viewers. As you said, you want to make it very simple. So Powerica has two main streams of lines of business. The first being the diesel generating part, where we have our associations with Cummins and Hyundai, up to the range that Cummins does in Hyundai, and above that, whatever Hyundai we get from Korea. The other one is the wind space. We've been in the wind space for about 12 to 14 years. We do both IPP and EPC work for the grid, mostly the government grid in Gujarat.
Understood. And on the utilization of fresh issue, I think that fresh issue comprises of 700 crore. What are the capacity expansions that company will do? What are the utilization of these funds, if you could, highlight us?
Yeah, so fresh issue we will be first utilizing for the repayment of the term loan, and thereafter we will be expanding our wind business as per the pipeline what we have developed in our company.
Understood. And also, Mr. Gupta, wanted to know the current order book and the execution timelines of the same.
So currently we have our installed capacity of 330 megawatt and 50 megawatt is under construction, which is likely to be completed by June 26. And thereafter we recently won 100 megawatt wind power project of GUVNL. And we have a total pipeline of 250 megawatt, out of which 100 megawatt we will be executing under the bid which we won from the GUVNL.
Understood. And Mr. Oberoi, considering the increasing electrification and of course the battery storage, do you see DG sets becoming obsolete? Any risk over there?
Absolutely not. These discussions have been up with on many seminars. So we have the battery storage coming up, but will it impact DG sales? We don't see that, at least. From my point of view, not at least for the next 15-20 years. A backup of DG power will always remain.
Also in the renewable sector, as per the CRISIL report, by 2030, I think the battery is going to take almost 5% of the total renewable energy storage. So if suppose Government of India has set the target of 500 gigawatt of the renewable target, 500 gigawatt of renewable target, in which around 25 to 30 gigawatt will be the battery support for the energy storage. So it's going to be only 5% of the battery support in the total RE basket of 500 gigawatt. So wind, solar is going to be the dominant player by 2030, and battery will also support for different type of projects like RTC power and wind solar hybrid along with the battery. But batteries support will develop, but it is going to be the slow process in the total RE basket, about 5 to 6%.
Well, you're watching the Small Cap Show. Now, what's on the show today? Firstly, we'll be speaking with the management of Regal Resources. Now, they have announced that they will be doubling their capacity by the end of this financial year. What could be the uptick that we could see post this doubling of capacity is something that we'll get to know from the management today on the show. Valiant Organics, that stock, if you see, the stock is up nearly 10% in the last 5 trading sessions. And if you look at the volumes, they are nearly 11 times the 20-day moving average. Thirumalai Chemical, that stock has also been buzzing in the trade. That snapped its 4-day losing streak. The company is building a new capacity, so something that we need to watch out for. And lastly, when it comes to Root Mobile, that stock has also snapped its 4-day losing streak. If you look at the volumes, they are nearly 11 times the 20-day average. So that's what we are going to discuss on the show. Now, if you look at the market, the Nifty is up nearly 240 points in trade. It is trading comfortably above the 24,800 level, around 24,827. If you look at the sectoral indices, this is the Nifty IT, which has been leading the gains today, and followed by Nifty Real Estate. While on the losing side, none of the sectoral indices are in red, but Nifty Metal has gained the list, just up 0.1%, followed by Nifty FMCG, which is also up just 0.2% in trade. But Varsha, when it comes to the small cap space, what's been buzzing here?
Well, Somit, a lot of stocks are buzzing, but this is on the back of volumes, higher volumes. So you have, Confidence Petro, which is buzzing. The volumes are at 2 times of its 30-day average. You have Valiant and Thirumalai buzzing at volumes of around 10 to 11 times. You have Sindhu Trade also, the stock is up. Again, strong volumes is being seen when it comes to Sindhu Trade. Then NPST and Universal Cable is also up. For Universal Cable, if you see, the volumes are at 4 times of its 30-day average. There you go. NPST is up 13%. Universal Cable is up almost 10%. On the loser side, though, you have Bajel, you have Sadbhav Infra and Oil Country, which are on the losing trend. So a lot of stocks are actually buzzing, but all on the back of volumes. But moving on, Regal Resources is one stock which is in focus now. If you see, it's a recent IPO. The IPO had come in August 2025, and companies doubling their capacity. But to speak more about the numbers and what lies ahead, I'm here joined by Mr. Anil Kishore Puria, who is chairperson and Managing Director at Regal Resources. Mr. Kishore Puria, welcome at NDTV Profit. and always pleasure to have you. Let me start with the capacity. You're doubling the capacity. Just wanted to understand what is the peak revenue expected and what are the timelines, if you could highlight us.
And for 25-26, we will be talking a turnover of about 850 to 900 crores. From here, we are doubling the capacity, so you can calculate, of course, कि अगर सवा 800 टन था, this was the turnover, now we are 1650, so what would be turnover? And along with the doubling of capacity, we're getting into a lot of derivatives. So that will add on to our turnover, further turnover, and of course to the bottom line. Value-added products, basically.
Also, sir, if I were to talk about the value-added products, that's the key trigger, that you are concentrating on. But the value-added margin decline in Q3 due to higher maize trading contribution. When do you see it coming back? And what is the value-added products target contribution that you're expecting, maybe in FY27? And what's the current contribution as well?
And what we are planning to do is, whatever additional capacity we'll be doing in producing starch, we want to ultimately convert into the value-added products. So that will give a big boost to the bottom line. Liquid glucose, maltodextrin powder, dextrose monohydrate, and dextrose anhydrous, and a basket of modified starches. And now the prices of maize have really come down, has softened. So going ahead, I am thinking, and that's what our expectation is, that the margins will improve than what the margins was for 25-26 because of lower cost of revenue.
Okay. Now, as I can see, in the last 12 months, you have done a revenue of close to 1,150 crore. In FY25, you did a revenue of 915 crore. Now, you're talking about doubling your capacity. So, where does this revenue number stand for the next full financial year, that is FY27, and what kind of margins can we see with increasing operation scales?
So, margins will, of course, be like last year we had about a production EBITDA was about 13.5%, and of course with doubling the capacity and doubling the sales and revenue, so we will of course be much better off because the fixed cost doesn't double what it is at the moment. So the EBITDA margin will of course increase, and with the value-added products, it will give a boost to the bottom line. So it will be, I think, so it should be quite a bit. I really cannot tell you the exact numbers, for 26-27, but it will be in a much more better situation than last year or the current.
Right. Can you just tell me what is the utilization level right now, and do you actually have that much orders in hand that even after doubling the capacity, your utilization will remain at that level?
We practically are using 100% utilization. Practically, it's 98 or 99%, and of course doubling the capacity. So we are getting new products. We are not making starch from the double capacity. We are adding on to a lot of new products based out of starch. So some part of starch will increase and a major part of value-added products will increase.
So are you confident that your revenue will also double, not at least in FY27, but at least by FY28?
No, I think so. By FY27, we'll be able to achieve that, what you just said. And of course, that's have been our main USP, our main strength point, that we have always, since inception, since 2018-19, we have always used practically about 95 to 100% capacity that we use every year.
One thing I wanted to check, during the IPO, I believe you raised 159 crore for debt repayment. But yes. I might be wrong, but can you just clarify, your debt amount has still not reduced? So is it that you will be paying this amount at a later stage? How does that work?
Our debt amount has not reduced because the doubling of capacity is about outlay of about 450 or crore rupees project costs which we are incurring. So for that, debts have been raised. Because of that, new debts which have been raised, you can see that the debts have not reduced, rather it has gone up a bit.
Also, lastly, the export contribution, sir, has declined to 4% from 7%. Any reason? And of course, the long-term target that you have when it comes to the export contribution, what do you want to take that number to?
And as a strategy, of the company and strategy of the management. We were never an export-oriented unit. We never had a thrust over export. I always believed in having a domestic market more than the export market, because the export market is again because of the other factors of China, Thailand, of these. It was guarded by those factors, which I thought that domestic will give us a better return, and that is the whole thing. Domestic has always been good for us, and that is why we have been having a better profit bottom lines for this. But now with new products coming in, maybe our export increases. Maybe we give another thrust for exports.
Right, and also you continue to procure maize even beyond immediate needs to build that farmer relationship. Where do you see, or how do you manage your inventory and price risk? If you could, update us on that.
Ma'am, we are procuring. We are one of the largest procuring materials straight from the farmers in our area, because Bihar being one of the maize being one of the major crops of Bihar, and especially where the plant is located. So we try to procure the entire material and we store it in our godowns, in our silos, in the factory and outside the factory, which of course gives us a gain if later when the prices, off-season prices increase in Bihar, because Bihar is in Rabi, and for Kharif crop, Bihar doesn't get maize from the farmers. It gets maize, either the stored maize or the maize from outside the state, from the states which are growing maize in the Kharif season. That is from September, October on.
Well, thank you so much, Mr. Kishore Puria, for answering all the questions, and all the best for your business. Thank you so much. Well, that was Regal Resources, expecting a strong growth. But let us invite Lancelot Dicuna, who's the CIO at ValueX Wealth Connect. Well, Lancelot, you heard the management of Regal Resources. They're expecting doubling of revenue by FY27. Do you track this counter, and what are your views? What should investors do?
So, when you look at this counter, they are operating at 90%, 93%, 94% capacity. And the net margins are around 13%. So if one has to increase the capacity, I think it will take a while before, while there may be an increment at the EBITDA level, I think the profit after tax level will also take into account some amount of interest cost, some amount of depreciation on the new plant. And also sometimes it may take a little bit of time for this plant to generate capacity at the same level, and stabilize at the same level. So one cannot, extrapolate it that, okay, this year, because the capacity is doubled, next year it would be automatically doubled. Even if the, turnover jumps significantly, there would be expenditure as well as depreciation, additional depreciation on the plant that would have to be debited before you arrive at profit after tax. And given that, earnings growth may not be double, but definitely looks exciting. You can expect maybe 20-25% earnings growth or 30% earnings growth in the next year or two. And that would mean some amount of re-rating, because the stock is trading at a relatively lower valuation. And once this certainty of the profit growth is seen in the market, then the price would move up accordingly.
Right. Shifting focus to Thirumalai Chemical. Now that is an interesting counter. At one point of time, the stock was up as much as 20% in trade. Its biggest intraday move that we have seen since June 2022. And this is largely on the back of strong volumes. Volumes are now nearly 20 times its 20-day average. Let's get in part to understand what could be the potential reason behind this up move in the share prices.
Yeah, thanks. So Thirumalai Chemicals is in focus today, and there's a very interesting thing about the company. What they're doing is they're building a new 40 KTPA chemical facility in USA, and the good thing about it is that the raw materials required for this facility are located within just 70 miles from the plant. So this is expected to save some transportation costs for the company. This USA facility is expected to reach 40% of their North American market, which is located within that 1,000-mile radius. This project's payback is expected to be reached within 7 years of operations, and the operations will be stabilized by the mid of this year. If we have a look at the stock performance, then yes, the stock has rallied more than 15% today, but in the recent past, the stock has witnessed some downside pressure. The shares are down more than 10% in the last 1 month. The prices have fallen sharply by 40% in the last 6 months, and year to date, the stock has already fallen 20%. If we have a look at the key takeaways from the last quarter, then they have said that the global chemical demand is on the weaker side, with utilization levels running at 70 to 75%. The housing market slowdown in China has also impacted the demand of some of the chemicals that the company produces and exports. However, the transition of their Dahej plant into a gas-based energy has yielded some benefits for them, and better operations in their Malaysian business has also helped them offset some of the cash losses.
Okay, thank you for that, Parth. Lancelot, Tirumalai Chemical, have you looked at this counter? It has been under pressure. In fact, all the chemical stocks were under pressure. But at the current valuations, do you think it's a right buy?
So, the company has been making losses in the past 2 years and has taken some steps to mitigate or reduce the amount of losses. But still, it still need to be seen, because whatever facility they are setting up in the US, you have to start getting profits from that, and that will have to offset some of the losses that are being incurred in the domestic business. So I think it's very premature to decide that whether this stock is really going to do well or not, because the company is still not making profits, and the road to profitability is lined with a bit of uncertainty. So it's better to wait to see, let the company come into profitability, then one can accumulate the stock as an investment. Otherwise, till that time, it is more of a hope that we are expecting that it will come into profit, but it may not be backed by fundamentals.
Well, moving on, Root Mobile is one stock which is in focus. Let's pull up that stock. The stock is up almost 10% and snaps 4-day losing streak. But what are the growth triggers ahead and the growth prospects ahead? For that, let's bring up Puneet. Puneet, what are your views when it comes to Root Mobile? What are the growth triggers?
Well, thank you for that. Volumes up 11 times the 30-day average for this particular counter. Stocks also up 10%. And very interesting, because stock's been down 36% since the start of the year before today's move. So has been one of the key ones, breaking its 4-day losing streak as well. What's important is that 3 key aspects about this one. Now, Q3 was largely weak on volumes of the international long distance platform for the company as well as segment. In Q3, they had specifically mentioned that while the revenues were largely stable, this segment has been continued to weaken over the last few quarters, and Q3 was no different. There's been a consistent moderation in the ILD volumes, and Root Mobile alone contributes almost 50% market share in the ILD volume space, a market that's been declining. So hence, there has been pressure on earnings as well as on the stock at this point of time. What's also interesting is that while Q3, realization was the other aspect that dipped as well, because of the billable transactions, which are flat quarter on quarter, and hence roughly not translating into revenue growth. But the margin story is also something that could be one of the triggers in terms of today's move as well, because management has mentioned that the gross margins were up almost 243 basis points in Q3, just on a quarter-on-quarter basis. YOY also the performance improved. Retention of the high margin traffic from the existing clients was one of the reasons touted by the management for this, but they specifically mentioned that telco and enterprises business will be something that will be a big margin trigger going forward. They've specifically also, brokerage from Nuvama has a hold with a target price of 630, which is a substantial upside from these levels as well. They continue to mention that ILD volumes will be a downtick, but they feel that the new business segments within the OTT could be some competition, but something to watch out for as well. So that's largely the bit on Root Mobile. A lot more triggers and things to watch out for in Q4 as well.
Well, thank you so much, Puneet, for all the details. Lancelot, after today's move, what are your views when it comes to Root Mobile? Because Nuvama is still bullish considering today's move. So what should investors do?
I think one should wait a while, because if you look at the business of the company, the segments that it is in, which is the long distance calling, these segments are declining. Yes, there may be growth on the OTT side, or there may be growth on the streaming services side. But if you look at its core business, which is the long distance telephony, that has been declining. And if you consider that, look at even the last 2-3 years, sales have been relatively on the flatter side. So right from 23 to 24, it's been approximately 3,500 crores to 4,500 crores, and profitability is also marginally down compared to the previous 2-3 years. So I think one needs to wait and see how this whole thing is playing out, what kind of earnings growth we can see and what kind of visibility we can see in the earnings growth before making a decision as to whether this can really generate that kind of returns over the next 2 to 3 years.
I got that point. Well, thank you so much, Lancelot, for joining this conversation. Always pleasure to have you with us. Thank you so much. But moving on, Valiant Organics is one stock which is in focus. Let's pull up that stock. The stock is up 20%. Well, just a little bit more about this company. This company focuses on high specialty chemicals, which were previously import dependent. They have diversified customers, which reduces dependency on in any one industry. Onto the operational highlights, the gross margin, the Q3 operational highlights, the gross margins were up 500 basis points. Improved pricing discipline and cost efficiencies have led to, operationally a better performance for the company. Turnaround from the last year losses. Q3 was though impacted by pricing pressure plus softer demand. Onto the, continuing for the Q3, how was Q3? There was a fall in revenue which was led by lower prices, but EBITDA improved due to better control efficiencies, and PAT was lower because of weak demand, and there was a one-time insurance income which helped profit. Lastly, if I were